as president, he promises to speed up the vaccine rollout. A spike in US yields sends risk-off rippling through markets. Futures are in the red a day after US stocks hit a new record high. And the EU AstraZeneca spat continues. From concerns over blood clots to vaccine delivery shortfalls, we bring you all of the details. Let's take a look at these futures then as we wait another 20 seconds for the start of the European equity trading session. Futures have been pointing to the downside. NASDAQ futures also moving lower and continuing to move lower as we've been going through the Asian session. So down by 1.1% on NASDAQ futures. The Asian session itself losing some ground as well, now just up by 1/8%, but it was a little bit stronger than that earlier on. So European equity markets opening up this Friday morning and opening probably down, as I mentioned. We are expecting a little bit of weakness, but this comes on the back of a decent session yesterday, a strong session certainly stateside yesterday with new highs on the S&P, thanks in part maybe to the $1.9 trillion stimulus package that has now been approved. So we saw the US up yesterday, Europe up yesterday. Futures then here in Europe and in the US have been negative this morning. Certainly in the US, we see that NASDAQ move. Contrast that with the Dow move. I was reading an interesting piece on what was dubbed by one of my colleagues the Dowdy Dow, but not looking so dowdy this week with stock rotation in mind. European equity markets opening to the downside then. This as a spike in US yields sends risk off rippling through markets. It seems like the stimulus sugar high is souring after US equities closed at record highs yesterday. Now NASDAQ futures are leading losses. Joining us now to look at these markets and the underlying economics, Simon French, Pamela Gordon, Chief Economist. Simon, very good Friday morning to you. We kind of thought things were looking quite smooth. New record highs in the US, the focus on stimulus, vaccine rollout in the US looking more slick. And we thought that was setting us up for something that might be flat to risk on. And yet NASDAQ futures point down by more than 1% right now. And yields have been back over 1.6% and the dollar's on the rise. Things have a slightly risk-off feel to them today.
Yeah, there's a bit of travel and arrive, isn't there? This has been a long-promised stimulus package, and to some degree, you're buying into the headline and you're selling the fact. Now it has crystallised. I think there's still plenty of uncertainty on how much the US economy can absorb of this $1.9 trillion package. 1.1 falls in fiscal year 2021. Now that is an awful lot of stimulus for an economy, a developed economy, to absorb, about 7% of GDP. Can it do it? Well, I think there's huge uncertainty over the degree to which the US participation rate will respond to try for the Biden administration and the Fed trying to run the economy hot. I think investors have reasons this morning to be concerned that that might be a disorderly transition.
And where would you expect this $1.9 trillion to show up in the US economy, Simon? Is it, I mean, if it goes if these checks get distributed pretty quickly and people have this money in their bank accounts, you know, people who maybe have not been able to accumulate savings over the recent pandemic, they may also go out and spend some of this. So where would you expect this and how quickly do you expect this to show up?
Well, there will be undoubtedly a nice pickup in close contact consumer services as and when various states and hopefully the whole US economy can reach a degree of herd immunity where close contact personal services, the type of consumption that consumers have been frustrated from doing for most of the last 12 months, I think that pent-up demand will garner an awful lot of this. But of course, we are seeing around the world spill over into real estate. There was some fascinating data out of New Zealand overnight. Pretty much every major economy at the moment is seeing a spike into real estate. And of course, there are these big cash balances, big checks. It's not clear that they will go into the most productive form of economic stimulus that closes what are quite significant output gaps as quickly as possible.
And so where does that take us on inflation? If the money sits in bank accounts or goes into real estate, Simon, and some of it will go elsewhere, where does that leave us on the inflation side of things? I mean, just to give you some size and scope on this, I was reading a piece by our colleagues suggesting that, you know, wartime levels of fiscal stimulus were required at this time because we're fighting a war against this pandemic. The US has spent $7.9 trillion on warfare in today's money since World War I, which is obviously a big number and is bigger than 1.9 trillion. But that gives you something to compare the 1.9 trillion to. This is a huge amount of money.
It is a huge amount of money, and I go back to my comments on the participation rate. What's fascinating is the Congressional Budget Office, when they're scoring this plan, assume the US participation rate will follow its 2-decade-long decline and move from around, well, it was 63% ahead of the pandemic down to the high 50s over the course of the next decade. But of course, the inconvenient truth and the fundamental question for the inflation outlook is whether the participation rate that actually ticked higher in 2016, 17, 18 and 19 as the US economy, at least on the demand side, had run hot. If that is a prevalent inflection point in the participation rate, then there's no real inflationary fear from a stimulus package on this scale. The challenge for investors is they won't really get the answer to those questions until the economy is fully reopened, and therefore certainly for the next couple of quarters there's going to be these bouts of fear that actually this is too much, participation rate will fall, there will be supply constraints, and inflation will start to decouple to the upside.
Okay, Simon, thanks very much. Simon French, Pamela Gordon, Chief Economist, who stays with us here on the programme. Coming up, the ECB pledges to step up bond buying to keep rising yields in check, but that doesn't mean an increase in the size of the stimulus package. That is according to our reporting this morning. We'll get Simon's thoughts on what we've heard from the ECB. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to the European Market Open. 8 minutes into Friday's trading session. Things a little weaker across the European equity markets today. We're down by a fraction of a percent on all of the major markets. Some of the deepest losses coming through on the German market, down around 0.5% on the Xetra DAX this hour. Let's take a look at what is on the move this morning with Bloomberg's Danny Berger. Danny.
And I've got some of the biggest movers to the downside today. Prosus being one of them, the big stakeholder in Tencent, where Tencent is said to be facing more crackdown from Chinese regulators insiders when it comes to their fintech business and future deals. So those shares dropping in sympathy with Tencent and, of course, its parent company, Prosus's parent company, Naspers in Johannesburg. One of the other big movers is Barclay Group, the home builders in the UK, issuing a warning saying that reservations are probably going to fall about 20% in 2021 because of the pandemic, because of lockdowns. It's also delaying new projects, new buildings until we do come out of lockdown, so we won't see developments from them until then. Daimler also falling. This has to do with Renault selling a pretty sizable stake, about $1.4 billion in the company. Its sale price was under 70 euros. So the fact that we're seeing it move lower down towards that sale price, not necessarily surprising there. I do want to get a quick look on the macro picture because that has started to turn as we get further into the morning, with yields piercing through 1.6%. We're seeing some of the high growth flying type names start to take a hit, down 1.3% in the NASDAQ 100 futures, which were green earlier today and, of course, ended higher on the day yesterday. Europe Stock 600, Anna, you mentioned this earlier before, we're seeing the entirety of the index down about 0.4%, but, of course, not as bad as a picture we're seeing in U.S. tech.
Absolutely, yeah. U.S. tech and futures on the NASDAQ down by 1.4% this morning then. Danny, thank you very much for that. Let's just get back to one stock we also need to mention, which is Burberry, the luxury trench coat maker. They make other things, but that's what they're often labelled. Burberry's share price on the move today, certainly moving to the upside. Sales rebound as they signal that luxury demand is buoyant, is the headline from some of my colleagues at Bloomberg News, up by 7%. And it seems to be that what they've said about the rate at which comparable comparable sales are on the rise, that is something that has pleased the markets, and equity markets close to new records, of course. Burberry signalling that rich consumers are still splashing out is something that could have read across for others in the sector. Let's get a Bloomberg First Word News update. For that, here's Laura Wright.
Thanks, Anna. President Joe Biden is accelerating the U.S. vaccine rollout. It's the first primetime address since his inauguration. The president ordered for all adults to be eligible for vaccinations by the 1st of May. He says the U.S. will reach his goal of 100 million shots in 100 days before only his 60th day as president. According to documents seen by Bloomberg, AstraZeneca will deliver less than half the planned number of vaccines to the EU in the second quarter. Astra warned of a shortfall last month after encountering production issues. It planned to tap global supply, but we're told that ran into trouble as countries are becoming more protectionist. The US is imposing new license limits on some of Huawei's suppliers. We're told the order prohibits the use of semiconductors, antennas, and batteries in or with 5G devices. The move is a sign that the Biden administration plans to move forward on tougher export controls brought in under former President Donald Trump. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Laura, thanks very much. Laura Wright here in London. Let's turn our attention to the ECB, which is stepping up the pace of its bond buying to keep rising yields in check. But that doesn't mean more stimulus. Bloomberg sources tell us policymakers intend to spend more now, but plan to pull back and slow down purchases later on. Here's what President Christine Lagarde had to say.
The Governing Council expects purchases under the PEP over the next quarter to be conducted at a significantly higher pace than during the first months of this year. There was consensus at the table of the Governing Council today. We're not doing yield curve control. We are preserving favorable financing condition with a look at the inflation outlook that we have and how one contributes to reducing the downward impact of the pandemic on our inflation path. Headline inflation is likely to increase in the coming months. Once the impact of the pandemic fades, the unwinding of the high level of slack, supported by accommodative fiscal and monetary policies, will contribute to a gradual increase in inflation over the medium term.
Simon French, Pamela Gordon, Chief Economist, is still with us. So, Simon, not doing yield curve control, what does that mean exactly? That means they haven't got a percentage that they're going to communicate to the markets that they target on, bond yields or something. Is that what that means? Because they clearly have expectations for what they want to see in yields.
I think Christine Lagarde must be the only person who believes that statement. They may not have an explicit quantitative target like the Bank of Japan and Governor Kuroda, but a flexible rate of purchases based on signs of tightening financial conditions, particularly at the long end of the sovereign market, is a acknowledgement that while they may not quantify it, I think there's always a little bit of a lesson learned from the Bank of Japan's experience with QQE, that other central banks around the world, the ECB, the Fed, the Bank of England, are actually doing yield curve control, but not in the same explicit way in which the Bank of Japan have done it, and just want to have the discretion to respond in real time. And I think this, you can trace this back to March last year, when financial conditions tightened about 2 standard deviations in a matter of weeks. They want the flexibility to respond if that was to repeat.
Yes, they want the flexibility to respond, and what they seem to be communicating right now is the speed at which they will use that PEP envelope, so what amount of bond buying they're going to be doing and when, and they're bringing some of that forward. But the message this morning, and from our reporting, seems to be this doesn't mean that there's new stimulus. It's not obviously an increase in the size of PEP, it's just bringing forward some of that money. How did you interpret those communications from the ECB?
Well, there's still €1 trillion worth of firepower, so I don't think there was any pressure on the ECB Governing Council yesterday to increase the size of the envelope, because if you're trying to lean in to potentially slightly, modestly tighter financial conditions as a result largely of what we're seeing in the US bond market spilling over into Europe, then actually, if you want to increase the size of the envelope, you can come back at future ECB meetings during Q2 and expand the envelope if need be. I don't think there was any pressure on them to do so, because actually people will be watching the weekly balance sheet quite closely on how rapidly that picks up and the degree, and probably infer from that what the rule of thumb target is from the Governing Council on what tolerance level they have around sovereign yields in the Eurozone.
Did you manage to infer anything from it? And did you learn anything about the speed at which they can move when they want to in the future, if they feel they need to do more quickly?
I'm going to wait until I see a couple of weeks of data on how quickly they pick up. I don't think we could infer from Christine Lagarde's statement or her response to the questions of a quantitative number at this point. But clearly, I will be tracking, I think a lot of people will be tracking how financial conditions, I keep coming back to this, they have nudged higher. They've nudged modestly higher in the US. They've very weak increases in the Eurozone. But if that happens quickly, what will be the variance on the weekly rate of purchases? Then, if we're back on the show in a month's time, I might be able to tell you what the informal quantitative target is for the ECB.
Right, that'll be interesting. And Simon, sticking with the European story, but away from the monetary policy and onto fiscal, I was interested to see that the German finance minister, yes, he's from a different party to the Chancellor, and there's an election coming, which is important to remember, but really interesting comments coming through from him on the debate around austerity, or whatever you want to call it, versus more expansive budget policies. He thinks that austerity will lose in the years ahead versus more expansive budgets in future. I wonder how that kind of thing from Germany sets us up for the next few years.
Well, the good news thus far during this pandemic is the fiscal policy has stepped up, not just in Europe, not just in Germany, but around the world. The risk, of course, for investors is that fiscal role, that the baton has now been passed, gets snapped back too quickly. Look, I don't think you would infer an awful lot from one politician or another politician giving a particular view on how it should play out on a 18-month, 2-year horizon, not least because we simply do not know how much scarring there will be in the Eurozone economy. The staff estimates had north of 9% Eurozone unemployment later on this year. How rapidly that comes down will actually drive a fiscal path rather than something preordained right now by German politicians.
Okay, interesting stuff. Simon, thanks so much for joining us. Really good to speak to you. Have a good weekend when we get there. Simon French, Pamela Gordon, Chief Economist. Simon will be continuing his conversation with us on Bloomberg Radio at 9 a.m. UK time. Coming up on the programme, Deutsche Bank expects revenue to decline as its trading boom slows. We get all the details from Frankfurt next. This is Bloomberg.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment. The politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
I have asked the Securities and Futures Commission and the Hong Kong EX to work together to explore the viability of our own Hong Kong version of specs. We remain very confident on the competitiveness of the Hong Kong stock market.
All adult Americans will be eligible to get a vaccine no later than May 1. We're not only going to meet that goal, we're going to beat that goal. I'm using every power I have as President of the United States to put us on a war footing to get the job done. I need you. I need you to get vaccinated when it's your turn and when you can find an opportunity. If we don't stay vigilant and the conditions change, then we may have to reinstate restrictions to get back on track. And please, we don't want to do that. If we do all this, if we do our part, if we do this together, by July the 4th, there's a good chance you, your families and friends will be able to get together where we not only mark our independence as a nation, but we begin to mark our independence from this virus.
President Biden there promising shots for all adult Americans who want one by May the 1st and freedom from the virus by the 4th of July. Let's get a Bloomberg Business Flash. Here's Laura Wright here in London. Laura.
Thanks, Anna. Credit Suisse overruled its own risk managers over concerns on a $140 million loan to Greensill Capital. It happened just a few months before the trade finance firm collapsed. We're told some at the investment bank in London were initially reluctant to grant the request, but the bank's risk chief did eventually sign off. No comment from Credit Suisse. Bosses at HSBC are trying to quell anger over cuts to banker bonuses. Sources tell us CEO Noel Quinn and his top lieutenants had calls with the Global Banking and Markets Division to justify the move. They wanted to know why the bonus pool was scaled back at the only unit that saw a revenue increase last year. Renault is selling its stake in Daimler for about $1.4 billion. That's to secure funds for its turnaround after a record annual loss. Last month, the French carmaker warned of another challenging year. Despite the move, the two firms say their partnership that dates back more than a decade will continue. That's the Bloomberg Business Flash. Anna.
Thanks very much, Laura. Laura Wright with your business flash here in London. Now, over in Frankfurt, Deutsche Bank expects revenue to dip this year. That's as a trading boom in the wake of the pandemic peters out before growth resumes next year. The CEO of the bank, Christian Sewing, is looking to focus more on growth after 2 years of deep cost cuts. Joining us now is Bloomberg's European finance reporter, Nicholas Comfort. Nick, Deutsche Bank, good morning. First of all, Deutsche Bank then benefiting from revenue tailwinds in the pandemic. But what do we expect from 2021? It seems that volatility normalization will be a relief to some and a loss of revenue stream to others.
Yes, precisely so. I mean, in last year, in the middle of the pandemic, not good news for most banks. But if you're Christian Sewing going through a big overhaul and you need to generate revenue somehow, this was a real bumper year for them in terms of revenue from the investment bank. But as governments scale back their spending for the pandemic and as the volatility in the markets subsides, the investment bank will have, sadly for them, less to do, and they will not be generating as much revenue. Interestingly enough, the bank as a whole, though, only expects a marginal decline in revenue. So while you have the investment bank sort of probably a chunkier decline, it's only marginal above all. And that's really thanks to the asset management business. Christian Sewing has big hopes for DWS, his asset manager, this year. And that should hopefully make up for a large part of the decline seen of the investment bank.
And what about the bonus situation over at Deutsche Bank? Are they living up to pledges that they previously made around how those bonuses will be allocated?
Yes, so Christian Sewing has been promising to pay for performance across the bank. At the investment bank, they did have a pretty large jump in the bonus pool compared to the other parts of the bank. I'm sure there are probably some bankers who will be liking to earn more. I mean, there have been some. If you look at the filings today, there have been some handsomely rewarded bankers there. Now, a bank as a whole, though, did not have as big of an increase as they'd like to have had. The ECB put pressure on the bank to exert moderation in terms of the bonus pool. That's something which maybe sort of in wider society is seen as normal after a year where people are losing their jobs in the pandemic. But it puts Deutsche Bank in front of a bit of a conundrum because they want to retain this talent, they want to pay for performance and be able to generate the revenues to carry them through the overhaul. But it's a very tricky tightrope to walk in this environment.
The politics are often challenging, post-pandemic also challenging. Nicholas, thank you very much. Nicholas Comfort, Bloomberg's European finance reporter. Coming up, we will take a look at the vaccine rollouts in the UK. We're going to look at the uptake of the vaccine amongst Black, Asian and minority ethnic groups. We'll be speaking to the CEO of the race equality think tank Runnymede. That is Halima Begum. Dr. Halima Begum joins us next with analysis of progress so far. This is Bloomberg.
Not only just COVID, but it's COVID related, but it's also stress related to job. I think COVID probably just sort of was the nail in the coffin for a lot of us. Having the destruction room here is also a very healthy outlet. I do not encourage it as something that we do on a regular basis, but I do find that when people come in, being able to break plates, being able to write out whatever's on their mind and letting it go, being able to just take out their frustration and their anger.
Come to a place like this and be able to break some stuff and release some tension without going to jail.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the European Market Open. 30 minutes into a European trading session that shows that European equity markets kind of in limbo, actually, as we wait for the US colleagues to get into action. Nasdaq futures have been increasingly negative as we've gone through the day, and European equity markets then are fairly flat in London. The CAC 40 fairly flat, and the Xetra DAX under pressure, down 0.4%. So actually recovering a little bit of our momentum from the early selling that we saw on European equity markets. Interesting to see the FTSE MIB is dropping back down towards the flat line, not quite there yet. We've just seen some lines cross the Bloomberg that say Italian regions, including Milan and Rome, may go into lockdown. This according to Italian officials. So a lot to think about when it comes to the vaccine rollout across the European Union, and the fight against coronavirus goes on here in that regard. We'll keep across those lines coming through from Italy. So that's the big picture on those markets right now. We're fairly mixed, aren't we? When we look at the sector breakdown, things look a bit more negative, actually. So the selling across many sectors of the market today. Banks, actually the best performing sector. We see Barclays, BNP, some of the Spanish and Italian names moving to the upside. So that gain in the banking sector, quite broad-based. We also see some of the sort of yielding stocks like healthcare and personal consumer, drugs and grocery stores moving to the upside. Those are the three sectors, only three, that gain. Technology to the downside, no surprise there when Nasdaq futures are off quite aggressively. Let's get a Bloomberg First Word News update. Here's Laura Wright.
Thanks, Anna. Japan's government is determined to hold the Olympic Games despite the ongoing debate over whether they should go ahead. There are unanswered questions about international spectators, quarantines and vaccinations. The president of Japan's Olympic Committee says he wants to provide the best environment for athletes and spectators.
It's easy to give up on things, but I strongly believe it's quite significant to hold the Olympic and Paralympic Games when the world has to overcome hardships together. It will become the light of hope for everyone in the world.
The UK government is intervening in a local planning decision over whether to build a controversial coal mine in Cumbria, northwest England. The move holds up planning for the mine, which has already been considered by the local council 3 times. It has attracted criticism from environmentalists and the government's own climate advisors. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna. Laura.
Laura, thanks very much. Laura writes here in London. Let's turn to the topic of vaccine uptake, and specifically here in the UK. The government's world-leading programme, at least doing very well compared to some countries, has administered more than 24 million doses to date. However, lower vaccine uptake among Black, Asian and minority ethnic groups risks leaving the virus circulating among certain communities and regions of the country. My next guest says the government should prioritise the rollout of vaccines to these communities in dense urban areas, and she has ideas about how to do that. I'm pleased to say, joining us now, Dr. Halima Begum, Runnymede Trust CEO. Dr. Begum, very good to speak to you. And, you know, a lot of research seems to be going on into the extent to which we see hesitancy within certain community groups and the extent to which we see uptake of the vaccine within those groups. When you look at the reasons for that difference between minority ethnic groups and maybe white populations, are there consistent themes that come through, a search for more information before committing to the vaccine? Is that the kind of reasoning that we're hearing about?
Thanks, very good to be on the show. So look, since the virus started globally and also in the UK, we've always known that certain groups who are disproportionately poorer and facing inequalities in society will be overexposed. So that's been a consistent factor. Whether you are Black, working class or poor, you are likely to have been overexposed. So that's been a consistent factor. And what we've now seen is over the last 12 months is the kind of spread of the pandemic in the UK, spread across racist groups really and socioeconomic groups. So now we see a situation where the vaccine take-ups are also being played out along the same patterns and trends. So poorer groups and BME groups that tend to be disproportionately poorer, living in high-density areas, are not taking the vaccine as at the same rate as white populations. But it is socioeconomics, it's also race, and we need to think about ways in which to move the conversation away from hesitancy to equity. I realise that this is Bloomberg and you have a different understanding of equity, but in health economics we talk about equity and access, and some groups are likely to be hesitant because of their historic experiences of healthcare treatment, for example.
Yes, and historic relationships with the state and authority figures, I know, also play into this conversation. The JCVI, which makes these decisions in the UK about which groups in society get the vaccine before others, Halima, they have said that they are distributing the vaccine with the aim purely and simply of saving the most lives. From what you're saying, though, there are certain jobs that put certain people at more risk than others. Is there any sense that we might see certain jobs being targeted for vaccine? I mean, they've said they're not going to do that, but is that constantly kept under review?
I mean, what we've said from about 9 months ago is that certain jobs are more precarious, so it leaves certain workers in certain jobs overexposed. I mean, that's just common sense. Certain people are more vulnerable according to age, but age is not the only risk factor. Ethnicity is a risk factor, deprivation is a risk factor, and government needs to find a way of prioritising that vaccine for groups that might be multiply disadvantaged in many ways. So simply looking at age as a risk factor leaves actually many minority communities unprotected, because our communities are by definition younger. You know, the BME communities across the world generally tend to be younger. So we've always known in the UK at least, and certainly in America, that Black and minority ethnic groups are disproportionately affected by COVID, but the vaccine rollout has started by age. Well, that immediately means that some of our groups are not covered. And then tackle onto that the fact that our groups have been historically distrustful, maybe lack confidence in the system, and they're also younger. Well, are we surprised that we see lower rates of vaccine uptake? What we now should be thinking about is how do we increase the uptake in those groups, for whatever reason they lack confidence in the system. Now, confidence can't be built overnight, can it? You actually have to think about more innovative ways to do that. Trust was broken over years. So we need the vaccine uptake to kind of shift a lot faster than the years that we have. So what are the ways in which we can rebuild that confidence? So maybe government could think about prioritizing ethnicity and deprivation, as it sort of has done by the back door, I think, about 4 weeks ago, but it needs to be much more explicit and say that certain groups are disproportionately overexposed, maybe by industry, maybe by ethnicity, maybe by deprivation. And that means that all of us will be protected, because this is an infectious disease. You can't really choose who you vaccinate in what order. You need to think about who's overexposed and how do we get the rollout distributed faster in more innovative ways.
And there are a lot of people internationally watching the UK rollouts and other rollouts in Israel, for example, where we're ahead in terms of percentage of the population that's being covered, Halima. And I wonder what they can learn about what is working in trying to contact groups that maybe are more hesitant around the vaccine or just aren't able to tap into the same messaging, the more traditional messaging. I wonder what is working, because some of the survey data does suggest that where there has been hesitancy, some of that has gone away. So what has been working?
Public health information campaigns have been working, actually, because, you know, in a mature democracy, it's normal to ask questions about the efficacy of a vaccine. Why wouldn't you? But it's important not to ridicule people who are asking those questions. It's important not to dismiss them as though they're anti-vaxxers. It's quite normal. So the public health campaigns have been working. But what we've also tried, I think, is move beyond the question of health access. So groups that are more affluent generally will access treatment or vaccines and other forms of healthcare. Groups that are disadvantaged, who face inequalities, are less likely to access healthcare in the same way. So we've tried more innovative methods. We're now actually discussing mobile buses, vaccination units, minicabs for jabs, door-to-door doctors going around to build confidence, working with our local community partners, because they are on the coalface of dealing with communities in this pandemic. If you were to try a national approach, you're probably going to miss the vulnerability at a local level, and that's what's working. And I think we need to move that conversation away from hesitancy to vaccine equity. What is it that we can do, in addition to the fact that healthcare here is free at the point of delivery? But there's more that needs to be done to build that confidence, and I think it has been working. But we do need to move away from saying that certain groups don't want to be vaccinated because they don't trust the system. Ask the question, why don't they trust the system, and how can we build back that confidence? And that seems to be working.
Dr. Begum, thanks very much for joining us. Good to speak to you. Halima Begum from the Runnymede Trust. Coming up on the programme, to a different type of equity, as Halima said, we talk about private equity, and we're going to be speaking to the managing partner of the Nordic Capital, who own the bakery food chain Ole & Steen. That's why there's a lot of reference to pastries this morning. Excited for that conversation. Danny Berger brings us that next. This is Bloomberg.
Of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse. Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP. But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Well, that was very lovely. A look there at the Tokyo Olympic Games, retro, NFT worthy, perhaps. Uncertainty remains over the delayed event, of course. Many questions still, including questions about spectator limits and COVID-19 measures that will be in place. Organisers will make a decision on allowing foreign fans or not later this month. So a lot still to learn about how this Games is going to take place. Let's dive into the world of private equity once again then. Activity has been booming for Nordic managers. Earlier this week, Sweden got its first SPAC. Then Nordic Capital announced a deal to buy a Sortera, a Swedish waste firm. Last month, it also listed a software company in Stockholm. Danny Berger joins us now with more. Danny.
Anna, thanks so much. I'm thrilled to say that joining us now is Christopher Molinder, Nordic Capital Managing Partner. Christopher, first off, thanks so much for joining us. And of course, you know a lot about that busy period for managers with the recent IPOs you've had and other exits. Why is now a good time to be taking companies public? Why is it so popular at the moment?
Hi, good morning, and thanks for being on here. I think what we saw last year was, of course, first of all, a big delay in all exit activity coming out of private equity. All activity basically stopped in the second quarter for the reasons we all know about. And since then, we've seen a very supportive environment with very, of course, a monetary policy and an inflow of funds into both private markets as well as public markets. Yeah, that's a very supportive conditions, and valuations have come up. And then now we're seeing this pent-up demand of companies which has been in private portfolios like ours, where we have been developing these businesses for a very long period of time, and we're ready to take them public. Right before Christmas, we took Nordnet, which is a leading online asset manager in the Nordic region. We took that public on the Stockholm Stock Exchange, and a month ago, Cint, which is a leading market research platform actually globally, also on the Stockholm Stock Exchange. Very significant IPO offerings, and we're very happy that they have performed quite well in the aftermarket as well.
It's interesting you mentioned some of the IPOs being more software type companies, because some of the recent market turmoil we've had over this inflation fears have been hitting the sort of tech sector. Does that sort of thing make you think twice perhaps about future IPOs? Will that damage the environment?
I think the correction that we have seen over the last several weeks here, I think that was overdue. There were many people who were concerned about the bubble phenomenon, in particular in emerging tech. So actually on our end, we're very happy that this happened. The companies that we have taken public have performed well throughout this period, I'm happy to say, also in the turbulent period. I think a correction like this, it sort of cleans out some of the fears that companies that are being taken public are valued too high. Is it the right type of quality and so on? When you think about the IPO markets, of course, you have the responsibility based on the public markets to be supportive of these IPOs, but it's also the matter of us as sort of the managers who are bringing companies to the market to bring the right type of companies, high quality companies with the right future to the market.
Well, so if that's sort of how the public markets react to the fear of inflation, what happens on your end as a private manager? How do you position yourself to perhaps capture any sort of rotation should inflation rear its head?
So in the private markets, I think things are just less volatile and maybe less exciting sometimes because we move much slower. The processes that we work with, they take months to prepare, both on the entry when we buy a company, on the exit when we sell a company. So we won't really see the big swings that we'll see in the public markets. When we buy a business, we generally assume a normalization of market conditions. We don't buy on the assumptions that these current conditions that we've been seeing for the last 6 months, that they will be prevailing when we're coming to exit. For us, the important thing is that we create value in the businesses that we buy, that we develop them in the right way, grow them, and they become stronger companies, so that even in a weaker, say, exit market, we'll be able to deliver good returns for our investors.
Right. Well, Christopher, you say maybe not as exciting, but I have to say one of the companies you own, Oleanstein, very exciting to me. I mean, one of my guilty pleasures pre-pandemic used to be buying a cinnamon roll. Of course, I can't do that anymore. So with a company like that, very, retail consumer focused, how do you ensure that on the other side, something like Oleanstein comes out strong?
Yeah, you have to come to Denmark. They're still open. We hope will be open again soon. And thanks for the sort of free advert there. This part, so retail and cyclical, it's really pretty smaller part of what we do. Most of what we do is focused on sort of tech side, on healthcare, on financial services, digital transformations, and so on. The businesses in this part, in particular retail, but also cyclically exposed businesses, they were really hard hit during last year because of lockdowns. Right now, we're really hopeful, and with the progress on vaccinations, especially in the UK, we're very happy to see sort of the progress in the UK compared to, I guess, continental Europe. But we'll be getting there soon again. And once that open, we know that basically we talk about pent-up demand. That'll be there.
Right.
And we know people will be back in the stores again.
Right. Well, speaking of pent-up demand, looks like once things open, I might need to be taking a trip to Denmark to get a pastry there. Christopher Molinder, thank you so much for joining us, Nordic Capital Managing Partner. Anna, I don't know about you, but I think I've all of a sudden got a lot more hungry.
Yeah, I'm a lot more hungry. I'm not sure that's a valid reason for travel, Danny. Just throwing that out there. Bloomberg's Danny Berger with the latest, with that really interesting conversation on private markets. Thanks very much for bringing us that and for making us all hungry this Friday morning. Coming up on the program, it is Friday. Brace for bounce of volatility. We take you through what to expect for the rest of the trading day. Laura Cooper is here with us, Bloomberg's Markets Live macro strategist. This is Bloomberg.
CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into this SPAC thing a little bit before it became such a hot method of going public.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back to the European Market Open. 54 minutes into Friday's session, and things are negative again. We flirted with the flat line, and now we are back down below. So European equity markets down 0.4%. Joining us now for more on these markets, Laura Cooper, Bloomberg's Markets Live macro strategist. Laura, good morning to you. I love the way you put it in your piece this morning. The stimulus sugar high is souring, and we certainly see that in US futures. Dow futures now in negative. They weren't earlier. NASDAQ futures down by 1.6% now.
Well, all indications, though, do suggest that what we're seeing is a short-lived kind of near-term correction, because ultimately fear is going to be dominated by greed, and that's just because we are seeing ample stimulus come through. So the U.S. stimulus checks are likely to come in by the weekend. We are hearing reports that President Biden is expected to have the country vaccinated by May. So clearly there are these indications that we're going to see equities continue to rally, and that is being supported by the bond market right now. We did have a knee-jerk reaction in U.S. Treasuries, but ultimately what we're seeing is there's not a lot of upside for them going forward. So it's really looking to be a muted day, but certainly not under challenging that longer-term trend.
And so you're not reading too much into the upside moves in yields this morning. You're not thinking that this goes too much further. We've been flirting with 1.6, and we're now at 1.58 or so. This, of course, a concern for the ECB, and we heard a lot about this yesterday. Are you clear on the reaction function from the ECB now, Laura, when we see bouts of higher yields? Are you clear what they will do?
I think initially the statement potentially did have some indication that, yes, they're going to significantly increase bond purchases in the coming quarter to try to contain those rising yields. But ultimately, when we went to the press conference, we heard about holistic, we heard about multifaceted financial condition indicators, and it's not really clear at this point what those are. And so I think ultimately it was a mixed messaging from the ECB. So I wouldn't be surprised to see markets test their resolve, and we do see yields climb higher.
Okay, Laura, thank you very much. Laura Cooper, Bloomberg Markets Live macro strategist. Thanks very much for joining us on the European Market Open. And that is it for the European Market Open. Surveillance, early edition, is up next. They'll be taking you through this week patch for European equity markets. Futures to the downside in the United States, as I mentioned. The dollar, though, this morning is bid. European equity markets losing a little bit of ground. I'll leave you with this view of those markets this morning. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
every power I have to put us on a war footing to get the job done.
I don't believe we've overshot the mark. I think that this package is the right size.
The Governing Council expects purchases under the PEP to be conducted at a significantly higher pace.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance, the early edition on this Friday, March the 12th. I'm Francine Lacqua here in London, and here's what's coming up on today's program. The checks are on their way. Well, Joe Biden signs his $1.9 trillion stimulus into law, and in his first primetime address as president, he says all American adults should be offered a vaccine by May. Upping the pace, the ECB says it will speed up its bond buying program in the next 3 months. But yields rise as the central bank says that won't mean increasing the total stimulus planned. And Thailand becomes the latest country to suspend AstraZeneca's COVID vaccine after Denmark and Italy, even as Europe's regulator says there's no indication that the shot is unsafe. So let's get straight to that top story. And Joe Biden's $1.9 trillion stimulus was signed into law last night. In his first primetime address, the president was optimistic about the future.
All adult Americans will be eligible to get a vaccine no later than May 1. We're not only going to meet that goal, we're going to beat that goal. I'm using every power I have as President of the United States to put us on a war footing to get the job done. I need you. I need you to get vaccinated when it's your turn and when you can find an opportunity. If we don't stay vigilant and the conditions change, then we may have to reinstate restrictions to get back on track. And please, we don't want to do that. If we do all this, if we do our part, if we do this together, by July the 4th, there's a good chance you, your families and friends will be able to get together where we not only mark our independence as a nation, but we begin to mark our independence from this virus.
Well, equities, too, were in a jubilant mood with the S&P 500 closing the day at a record high. Let's get more on the markets with our reporter, Danny Berger. Danny, I have a million questions on digital art and NFTs, but I'll have to wait a couple of minutes because we need to talk about, stocks were at a record high in the U.S. thanks to the stimulus.
Yeah, stocks at a record high, $69 million spent on a digital piece of art. Really interesting day. And look, we are seeing some of those gains start to be given up today. And there's no really necessary big catalyst that's had these moves. Really, it really is just all about 10-year yields moving at one point, hitting 1.6% today. So we're seeing some of the weakening, especially in the tech sector. But this news of stimulus is one that could reignite fears of inflation in terms of the economy. We're already getting some strong data out. Yesterday, joblessness falling to a 4-month low. We're also seeing household savings spiking about $1.5 trillion and household net worth also rising by nearly $4 trillion in the fourth quarter, $6 trillion rather. And so this paints a picture where the stimulus is still important, that despite the fact that we do have this huge spike up in net savings, the economy has been pretty uneven. That recovery has hit a lot of those low-income workers harder. So should the stimulus really encourage people to spend again, all of that pent-up demand, all of that pent-up savings could really ignite a very powerful rebound in the economy.
Danny, talk to me a little bit about what we're hearing about China cracking down on some of their tech giants. So the latest is on Tencent. What does it mean for stocks we're watching today?
Exactly. Well, it definitely impacted Tencent in the Hong Kong trading. It's impacting today Prosus, who's a company that, of course, has a large stake in Tencent. China reportedly cracking down when it comes to Tencent on their fintech business and deals as well. So all of the companies related, Naspers, which is the parent company of Prosus, also fell in Johannesburg trading. Lots of corporate stories, though. Just want to touch on a couple more. Deutsche Bank saying that their revenue might be marginally weaker because they're not going to see that big trading bonanza we had last year as volatility is subdued. Of course, they're about halfway through their turnaround plan. And Burberry, huge rally today, 8%, seeing a better outlook, seeing growth, sales growth about 28% 8% at the low end. The average analyst estimate was 24%. So even in the lowest estimate that Burberry is giving us for the 3 months through March, they're seeing themselves outperform. So fashion, at least in the case of Burberry, seems to be making a comeback, Francine.
Dan, I actually love the Burberry story because it kind of shows that as soon as you reopen an economy, then people flock back to the stores. So I guess there's pent-up demand for luxury shopping that we hadn't seen. Danny, okay, there's one thing that makes me feel like, as my 6-year-old would insult me, like a grandmother. So NFT, I can get behind. Yesterday, there was a piece of digital art that was sold for $69.3 million.
Yeah.
What's going on?
Yeah, I think it's kind of this perfect storm of one, there's just a lot of money sloshing around out there. Of course, blockchain being really important, crypto being really important. So it's all of these impulses coming together to create this high demand, 69 million, of course, for that digital piece of art, Francine.
I mean, it's just amazing. Dan,
It really
show a picture. It's kind of like Pixar. It is quite cool. I'm just not sure how you use it yet. We'll get to the bottom and actually bring you the latest news on the NFT and how you can display it on your wall. Danny Berger there with the very latest on the markets. Now let's get straight to Eddie van der Veld, our markets live strategist. Eddie, I know you were bidding for that NFT yesterday at the Christie auction. Didn't get it, Eddie. Maybe better luck next time. Does it again just point to how much money there?
Very early. But I will say that you know, with the whole NFT excitement, I've seen that people have put even some of my tweets after I was asking questions about NFT. They were putting some of my tweets up for sale. I don't think we've had any bids yet, but that's a bit disappointing. But I mean, the broader point, this just adds to this sense in markets of, you know, that markets are feeling bubbly, and that markets are really built on this foundation of low interest rates. And as we see, you know, yields still ticking higher, you know, at the margin, I think, you know, that is the big risk factor for markets here. That upward shift in yields pops the bubble across markets.
Eddie, I definitely want to bid for one of your NFT tweets. When you look, Eddie, at I guess, you know, the difference between what the economy is going through, which is we still have quite a lot of jobless numbers, you know, the economy is not going great, although vaccines are coming, and some of these valuations, like how difficult is it for us to spot bubbles?
Yeah, I think it's very difficult. I think there's a lot of pressure on economies to continue growing because, look, number one, just to get back to the GDP, to global GDP where it was 18 months ago versus where it is today, requires an upscale, you know, of manufacturing. The growth rate will have to be so much higher than it was then. And it's not absolutely clear that supply lines globally can keep up with that. We're seeing those pressures come through in chips manufacturing. We're seeing that pressures come through in commodities prices. So that will be really interesting, whether, you know, whether the rate of increase in GDP will be able to get us back to the GDP that we were 18 months ago. Because if not, then pretty much everything is in a bubble, right? Because everybody is pricing a massive comeback. But that said, you know, going into the summer, there's going to be pretty strong demand if the developed world has managed to sort out vaccinations.
Eddie, where are we seeing inflation? So we have a great piece. I don't know whether we're looking at a commodity super cycle or whether, you know, we can import inflation from some of the emerging economies that actually are using more commodities, or whether we're importing inflation from China. But, you know, is this the biggest debate for the markets over the next 3 months, is whether we're going to be awash with inflation or not?
I think it is, but I think it is accepted, given what's happened to commodities prices, that we will see some inflation, and given what's happened to chip prices, and given what's happened to supply lines, that there's going to be some inflation. The question for economists, though, is this going to be short-term cost push inflation, or is it going to be real, true demand pull inflation, where demand is so strong that it pulls up prices? And it's not clear that that's the case. And I think that's the balancing act for policymakers at the moment. They feel that they can keep interest rates low if there's a short-term impact on inflation, and for the most part, they'll be happy to see an uptick in inflation. So I think it is the big question, but I think the commodity supercycle is a much bigger question about us shifting to electric vehicles and using more copper and using more cobalt and that sort of thing. So I think those are two very big debates that are going on in global markets.
Eddie, thank you so much. Did you get a pet during the pandemic? Because I've just read that actually 3 million UK households got a pet since the pandemic started.
That's another one where I priced out of the market. We wanted one, but do you know what happened to dog prices in the UK? They went through the absolute roof. Yeah, we couldn't afford one.
Yeah. Eddie, I also looked into it. There was a puppy shortage definitely in those couple of months where we were looking and then we gave up. Eddie van der Walt, with everything you need to know really on any market, including puppies from our MLive team. Now, coming up, the ECB pledges to set up the pace of bond buying to keep rising yields in check. But that doesn't mean an increase in the size of the stimulus package. We'll discuss that and, of course, more on the U.S. stimulus, the dollar with RBC Europe's Elsa Lignos. She's coming up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance, the early edition. I'm Francine Lacqua here in London. Now, Europe's central bank has no intention to expand its emergency stimulus program, even as Christine Lagarde pledged to step up the pace of bond purchases in the immediate term. Lagarde's pledge is threatening to turbocharge a yield divergence with the U.S. that could drive money out of Europe, while President Biden's $1.9 trillion of stimulus could actually only exacerbate the problem unless the Fed makes its own commitments to ease policy next week. Well, joining us now to discuss everything currency, of course, the ECB and the stimulus, is Elsa Lignos, RBC Capital Markets Global Head of FX Strategy. Elsa, first of all, thank you so much for joining us. When you look at the relief bill that was finally passed through the House and actually signed on by President Biden yesterday, is it all priced into dollar, or could it actually lead to some moves?
It's taken a while for markets to fully acknowledge the impact that the U.S. fiscal stimulus is actually going to have on the dollar. As you and I know, so many people were bearish at the tail end of last year, the beginning of this year, and I think people are kind of coming round to the view that the dollar will benefit from this fiscal stimulus. Can it run a bit further? Sure. I mean, we've only just seen positioning turn short euro dollar on our metrics. If you look at the IMM data, it's actually still net long euros. So yeah, it probably could run a little bit further from here.
Also, when you look at the big debate that's really been obsessing markets, which is, are we going to have inflation strong enough to warrant some kind of move from the Fed? If we do have inflation, where do we see it first?
think we're already beginning to see price pressures creeping through, in ISM surveys, business confidence surveys, not just in the US. And I think your previous contributor did highlight that we're seeing different types of inflation. You're seeing it creep through in some commodity prices, soybean prices, for example, the best performing commodity at the moment. As time goes on, we may see that beginning to rotate in some more of the services industry. At the moment, services have been particularly badly hit by the pandemic, but I would expect that as you get some normalization, vaccination, economies reopen, that will be where people are most keen to spend their money.
So when you look at some of the things that we heard from the European Central Bank, we have quite a lot of officials saying, look, the pace of buying would accelerate, but not necessarily the amount. What does that mean for euro?
Yeah, I think you had a Bloomberg story about it overnight with a number of governing council members thinking that the actual overall envelope is probably about the right size, but they may speed up the pace of purchases. From the point of view of the currency, it's really what this signals for conventional monetary policy. And I think as you look at other countries, in particular the US, where markets are now beginning to price the start of tightening, conventional rate hikes, not this year, of course, but it is starting to creep into 2022. The fact that the ECB is still going to be buying, is still very much talking about, asset purchases, that's the focus. It just signals that conventional monetary policy tightening is that much further away in Europe than it is in other places.
Do they need to step up? Is there a real worry and a danger that Europe actually falls behind because of this massive stimulus in the US? Will it be enough to also drag Europe upwards, or does Europe just need to do more?
I mean, Europe's in a tricky position at the moment. It's really interesting. If you look at the fiscal stimulus that's been delivered across G10, European countries, EU countries, Euro area in particular, have delivered the smallest amounts. And a lot of that has actually come from automatic stabilizers. So if you compare that to the US, the UK, even Canada, Australia, New Zealand, which have actually delivered in many cases combined stimulus over 10% of GDP over 2 years, the euro area is around half that. And I think that just underscores the fact that monetary policy is going to have to do more of the work. And from a currency perspective, that at the margin means a weaker currency.
What can monetary policy do here in the UK, Elsa?
I mean, monetary policy in the UK actually doesn't need to do all that much for the moment. I was surprised, to be honest, how stimulative the budget was. It had been billed as this is going to be the budget where Rishi Sunak kind of takes back a little bit of the support from last year, thinks about fiscal tightening and getting the finances back in order. And in fact, all of the tightening measures were pushed out to 2023 and beyond. So the fact that the fiscal side is doing so much at the moment, some really generous provisions for investment, for example, and so on, it just means that monetary policy has a lot less work to do in the UK.
I know today we're talking quite a lot about the China crackdown on some of the technology stocks and also maybe this renewed spat over 5G between the US and China. Have you changed at all, Elsa, your take on where renminbi goes from here?
No, not really. I mean, I think there's a longer term story playing out, which is a much more strategically competitive relationship involving between the US and China. I know that tech stocks rallied quite a bit earlier this week on the news that US and China industry bodies are getting together and trying to agree on joint standards. But the fact is that the Biden administration is taking a much firmer approach than the Obama administration did 4 years ago. So I think longer term, that is certainly going to see this very slow and steady, you could call it a deglobalization. I mean, it's not going to happen overnight, but I don't think it impacts the renminbi from today to tomorrow. As far as that's concerned, it's much more a story of yields in the US, what those are doing. We've seen some upward pressure on dollar Asia. That may reverse if you see yields stabilizing.
Elsa, thank you so much. Elsa Liepnos there, RBC Capital Markets Global Head of FX Strategy. Now, the benefits outweigh the risks. That's the verdict of the European regulator on the AstraZeneca COVID vaccine. So up next, we talk about the latest EU-Astra spat with the Director of Research at Bloomberg Intelligence, our very own Sam Fazeli. This is Bloomberg.
Bloomberg Surveillance, Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance, the early edition. I'm Francine Lacqua here in London. Now, the AstraZeneca EU spat rumbles on. The European Union drugs regulator says the benefits of AstraZeneca's vaccine continues to outweigh its risks. Now, the EMA comments come as countries such as Denmark, Italy, and Norway temporarily suspend the use of some or all of the Astra shot because of concerns around blood clots. Well, joining us now is our Director of Research at Bloomberg Intelligence. He's Sam Fazeli. First of all, Sam, it seems that AstraZeneca can't really catch a break. Is it safe to have the vaccine?
I mean, Francine, good morning. I obviously, the data, the safety data is continuing to gather wherever the vaccine is being used. And so I'm going to have to defer to the fact that the UK regulators haven't signaled anything after having vaccinated more than 11 million people. If there was truly a signal, it would have appeared there, and I doubt that therefore there is a signal. But you have to watch out for these things.
But are people not wanting to be vaccinated by AstraZeneca? What we're trying to understand is really how much of this is political.
Yeah, I'm assuming the health authorities in Denmark weren't doing this from any political angle whatsoever. It does feel to me a bit of a miscalculation, however, because I think the first step would have been, and I think the European Union owes it to its subject, to create which of course Denmark is not part of, but Europe, to create a centralized database of safety, like the US has in the Centers for Disease Control, so that people can access it and have a look when they see signals like this. Do we worry? Don't we worry? But I don't think that exists.
Sam, there's also another story that really caught our eye, which is the Russian vaccine, or Russia wants to use its vaccine and to inoculate 1 in 10 people around the world. I mean, at the moment, they're so far behind. Could they really achieve it?
Well, they've done lots of deals with lots of people. I think it's now been approved in potentially close to 50 countries. So, we know what it takes to achieve that. One, you've got to manufacture enough of the stuff. And two, you have to be able to deliver it to people. And so, in terms of delivering the jabs. So, both of those things are possible. 1 in 10 is 700 million people. So that's not exactly a particularly massive number.
Sam, does a lot of this actually goes back to vaccine nationalism? How many countries are trying to push vaccines than to have some influence on the economy or politics?
At the end of the day, I think what we're seeing more and more is that despite what I think we were all worried about, that hoping for, that this would end up being an egalitarian, equal distribution of vaccine, has turned out to be actually the opposite, and everyone's hoarding what they can for themselves. And so maybe you do need vaccines like Sinopharm and Sputnik to be able to actually get the rest of the world vaccinated.
Sam, overall, are we, in 10 seconds, are you impressed by the efforts of how quickly actually a lot of the countries are getting people vaccinated?
Some countries I'm really, really impressed by. Israel has been incredible. UK, great. The US has really picked up. If you look at it, it's fantastic. So I just hope that the rest of the world can emulate that.
Sam, thank you so much. Sam Fazeli there of Bloomberg Intelligence. This is Bloomberg.
everybody says we should practice before we go to Mars, but some people say we need to practice on the moon. Well, you could practice on the moon, but you can do it at 1/10,000th the cost in the desert in Utah.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
The checks are on their way. Joe Biden signs his $1.9 trillion stimulus into law, and in his first primetime address as president, he says all American adults should be offered a vaccine by May. Upping the pace, the ECB says it will speed up its bond buying program in the next 3 months, but yields rise as the central bank says that will not mean increasing the total stimulus planned. And Beeple nets nearly $70 million after selling his digital art as an NFT. Coming up, we'll discuss the latest tech craze to hit the art world. Well, good. I'm still trying to get my head around NFT. Good morning, everyone, and welcome to Bloomberg Surveillance, the early edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. I'm sure we can do an NFT on the World First Word News with Leanne Gerrans. Hi, Leanne.
Good morning, Francine, and thank you. Japan's government is determined to hold the Olympic Games despite the ongoing debate over whether they should go ahead. There are unanswered questions about international spectators, quarantines and vaccinations. The president of Japan's Olympic Committee says he wants to provide the best environment for both athletes and spectators.
It's easy to give up on things, but I strongly believe it's quite significant to hold the Olympic and Paralympic Games when the world has to overcome hardships together. It will become the light of hope for everyone in the world.
And the UK government is intervening in a local planning decision over whether to build a controversial coal mine in Cumbria, northwest England. The move holds up planning for the mine, which has already been considered by local councils 3 times. It has attracted criticism from environmentalists and the government's own climate advisors. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Thank you so much, Leanne. Now, investing in marijuana is becoming more mainstream. The London Stock Exchange has seen several cannabis-related listings this year, a few months after UK regulators gave them the green light. Now, one of them is Cellular Goods, a provider of cannabis-based consumer products backed by retired soccer star David Beckham, football star. Now, the company recently started trading in London after raising £13 million in an IPO. Well, joining us now is Alexis Abrahams. He's Cellular Goods Chief Executive Officer. Alexis, so good to speak to you because I know there was so much buzz when you actually listed and the share price actually went pretty wild on the day. Overall, how much more can this grow? Are we just at the beginning of what some of these cannabis-related products, demand for that will be in the next 3 to 4 years?
I think that's absolutely the case. We're seeing a maturing of the market. For cellular goods, this is about cannabis 2.0, and what that's about is cannabinoids, and not just any old cannabinoids, but cannabinoids from cellular agriculture and operating within what is an increasingly clear regulatory framework, especially in the UK.
So if you look at some of the, product development plans, who are you teaming up with? Where will we actually be able to buy the goods? And is it, some of, for example, the Holland and Barretts of this world, which are, I guess, health stores where you could, team up with?
So in terms of our go-to-market strategy, we're taking a very targeted approach. We are in ongoing talks with a couple of key online and offline retailers. And what we're also trying to judge is the balance between distribution through them and through our own direct-to-commerce e-commerce platform. In terms of products themselves, we're looking at 3 verticals, and that's skin wellness, movement, and pet care.
Pet care is definitely, we were just talking about the fact that 3 million households in the UK got pets in the pandemic. Is it tied to that? Is it, something that you're benefiting thanks to pandemic demand for pets?
I think it's something that the pandemic has drawn our attention to. It's going to be quite a long process. To do it in a fully compliant manner means engaging with all the appropriate regulatory bodies, doing our own proprietary research and studies, but all of the anecdotal evidence suggests that this is something that could be of great benefit to consumers' pets.
Alexis, why did you choose the start of this year to list?
We chose the start of this year as much as this year chose us in a way. It's been a long journey. We've engaged with the regulators, with the FCA from the very, very beginning, and it has been a fine thread of establishing exactly how one can list in a very open, overt way through the front door of the London Stock Exchange main market.
Are you expecting the boom in pot stocks to continue in the UK?
I think we are probably seeing the beginning of a large number of mergers and acquisitions, of everything really capitalizing on what is undisputably an enormous consumer interest in the sector.
What's the question you got the most? This is a fascinating story, Alexis, and I have a million questions as we try and understand it more. But what was the question you got the most by, from potential investors?
I think probably around understanding, what is cellular agriculture, how are we different, is this cannabis was one, for example, and of course this isn't, we're in cannabinoids. And cellular agriculture, to sort of put it really overly simply, and I'm sure my team will chastise me after this, but it's basically like making beer. You start off with a sugar or a feedstock, you stick it in a fermentation vessel in the presence of a microorganism, usually that's yeast, it might be algae, and then in a matter of just 5 to 7 days, you end up with a broth, which is practically your end product, in our case, a cannabinoid.
But so a lot of the fund, and again, I'm trying to get my head around it, but a lot of the funds don't actually allow, don't have mandates that allow for investors to, be involved in what we call pot stocks. Do you see that institutional appetite for your stock, or will we see it in the future?
So we certainly had that conversation. Lombard Odier took a 5% stake at IPO, and there were some intricate conversations with compliance around exactly why we are meaningfully different from other, so-called pot stocks.
So is being called a pot stock a good or a bad thing? I can't actually make my mind up.
I think it's something we have to live with, and, headlines are the way that people get their head around perhaps initially complex ideas. I think the whole tapestry of pot stocks is going to evolve, and one of the big things for us is the educational piece around helping consumers to understand that we're not cannabis, we won't get you high, we're legal, and we're only bringing to market thoroughly tested and proven products.
Will David Beckham endorse or be involved in marketing any of these products?
Yeah, certainly that's one of the questions that we do get asked a lot. At this stage, David Beckham Ventures is purely an investor. Clearly, as a consumer-facing brand, if a conversation was opened, we would be delighted to have that with somebody who's an icon, who's unquestionably one of the best loved sports personalities globally. But at the moment, it's purely an investment mandate.
Has it helped having his name attached to it?
I think it would be impossible to deny that it's gained a lot of attention for us, for the sector. And I think if we can translate that into better understanding and better engagement with it, then that can only be a positive.
Great. Thank you so much, Alexis. And we're looking at your share price. I think it's been up some 145% since listing. Alexis Abraham, Cellular Goods Chief Executive Officer. Now, coming up, we also speak to one of Europe's star hedge fund managers and owner of Lorient Football Club. Loïc Ferrier is up next. If you have any questions for him about markets or even football, you can directly tweet me or IB me or go on to IB Plus TV Go if you're a Bloomberg user. This is Bloomberg.
Expect that face-to-face learning is the ideal, but I don't think that we are ever going quite back to that. What we're seeing is more of this integration of the technology into the day-to-day. We have seen that schools have had this kind of trial by fire in terms of trying to reopen successfully, and that many schools have had to use a system of using different ideas around what it would take to reopen and then pivoting when those ideas did not work well, meaning that some have had to go back and had to close. And that's been a global challenge.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Economics, finance, politics. This is Bloomberg Surveillance, the early edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Credit Suisse overruled its own risk managers over concerns on a $140 million loan to Greensill Capital. It happened just a few months before the trade finance firm collapsed. We're told some at the investment bank in London were initially reluctant to grant the request, but the bank's risk chief eventually signed off. No comment from Credit Suisse. Now, bosses at HSBC are trying to quell anger over cuts to banker bonuses. Sources tell us CEO Noel Quinn and his top lieutenants had calls with the Global Banking and Markets Division to justify the move. They want to know why the bonus pool was scaled back at the only unit that saw a revenue increase last year. Renault is selling its stake in Daimler for about $1.4 billion. That's to secure funds for its turnaround after a record annual loss. Last month, the French car maker warned of another challenging year. Despite the move, the two firms say their partnership that dates back more than a decade will continue. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, stock pickers can breathe again. That's what Bloomberg opinion columnist John Authers says in his latest piece. He says that after another day of screeching turns in the U.S. stock market and an enthusiastic attempt by the ECB to keep bond yields down, the winners and losers are growing actually clearer. Well, Authors concludes that with this market turbulence, active managers may have enjoyed a revival. Well, to talk about all of this, to talk about also reopening at the end of lockdowns, is one of Europe's star hedge fund managers. At the beginning of the pandemic, it was reported that he was up some 70% in his investments. Well, Loïc Ferry is known in the world of markets as Chanavari Investment Managers Chief Executive Officer and Co-Chief Investment Officer in the world of football as Chairman of Lorient FC. So, Loïc Ferry, thank you so much for joining us. First of all, when you look at the pandemic and what has come up in terms of distressed assets in the debt market, what are the best deals out there?
Well, I think we should say that since Q1 last year, I mean, the market have been riding what we can call as the waves of the virus, right? As each of those waves acted as several mini market cycles that were large, and the markets were very correlated with the evolution of cases, deaths, lockdown, re-lockdown decisions, and so on. So clearly, the rollout of vaccine now in large scale is a game changer and will permit normalization of the economy. And I agree with you that while question mark may remain with regards in particular the timing of full normalization and also whether we will really go back to the lives we had before, sectors like travel or office work and so on, are question marks. But, we will see certainly a lot of opportunities around growth, around value, and obviously inflation and interest rates will be key parameters to watch.
So, Loïc, what are the kind of sectors that you're interested in? What happens, for example, to financials?
Well, financials, I mean, we expect further credit normalization, especially in peripheral countries. There'll be a continued deleveraging in the EU banks as COVID has kind of stopped a little bit the regulatory pressure, but now it's restarting. So you'll see sale of portfolios. You'll see, obviously, M&A is going to be a big theme. There's a lot of M&A upside, especially for champions on the peripheric countries. And I think we could even see in Europe the sort of creation of a network of bad banks that would eventually dissipate for good the fear surrounding, the asset class quality deterioration. Yeah. I think we will also see a lot of opportunities, given the fear on inflation, and maybe we'll talk about it later. A lot of investors are going to have to shift from the paradigm of the traditional, a portfolio with 40% in fixed rate bonds like, treasuries or whatever. And they'll look for asset class, that basically have a floating rate exposure or actually are, credit origination program where you get exposure to rates as the time that they are originated. So I think those are the themes that we will see, and I think that with government budget stretch, monetary policy at odds with inflation concern, maybe also we'll see government response as a lot of measures will be incentivizing and to some extent deregulating. So that could be very positive events for banks.
But Loïc, what's the biggest risk, actually, that even if you look at banks and if you look at all the SPACs that are out there, you're definitely, and you mentioned this, the change in the 60-40 portfolio, maybe people are looking for yields in riskier places, or there's a lot of money going all in one place. Is this a risk that we're creating bubbles, and how do you spot them?
Yeah, there's clearly value traps at the moment in the market. I would say that the risks are mainly threefold. There's inflation and its impact on interest rates. There is obviously corporate default risk, and I would say that overall there's let's say the bubble risk. So if we talk quickly about the three of them, on the inflation side, it's clear that short-term inflation will surprise on the upside, especially as the supply chain normalize. The normalization of the supply chains, by the way, is creating other opportunities, and maybe you can talk later about it. So, inflation means that, we're going to be having to avoid long duration assets. As I said, classic investment portfolios will migrate towards more, credit risk exposure such as ABS, credit origination program, or synthetic investment, synthetic credit risk. They have very limited rate exposure, and we should definitely be concerned about inflation. It's not, but there hasn't been any in many years that it cannot resurface quite quickly. Interest rates.
So you think inflation is coming, Loïc? You think inflation is coming to an extent where actually interest rates have to shift?
Alors, especially, we had ECB announcing, the accelerated purchase already. I think they've been extremely quick, maybe too quick to respond to rising bond yields. I think to some extent we could say that ECB may be spending ammunitions before it is already needed, and maybe we can regret Mario Draghi, who was when he acted as if he had a lot of ammunition, but he was not shooting much. So today, of course, inflation numbers are expected to pick up, but I'm a bit worried that we're acting too early, because then it might be making life more difficult when it's really needed. So I think, yeah, we'll see definitely with the recovery, we'll see a surge of prices. So inflation, it will be definitely, the relaunch of the economy will basically create lots of needs on the working capital requirements. So on banks, and all financing sources will be tapped a lot.
We talked about Greensill, the collapse there, and a couple of things that have really potentially moved the markets. Is there anything that you worry about because it could be systemic or could actually take other companies down?
Well, I mean, clearly, what has happened, around the companies you've mentioned, and to us is no surprise. I mean, we've been an active player in the supply chain finance and trade finance place, and so obviously, what COVID did and what COVID crisis did, it unveiled some large issues in the industry, and we saw in particular, especially in the first half of 2020, there were a lot of operational inconsistencies around trade finance facilities. Some of the market participants have basically retraced from that market very early on, and we were one of them. We obviously haven't avoided all the trouble, but we've been able to return a very large amount of money to investors on that side. Now, what basically is more worrying is I definitely have big concern for potentially German municipality banks, some of the asset managers largely involved and with large exposure to Greensill. For example, we talked about Credit Suisse earlier. We think that they definitely have an untapped exposure at the moment. So but the opportunity to engage in this market at the moment, the supply chain financing, the trade finance opportunities is considerable, and that's definitely an area that we're focusing on, especially as commodity prices are rising.
Are you fundraising at all to prop up your presence in private credit? When you look at how the future of the markets is,
Yeah, of course. I mean, we've been an active participant since over the past 10 years, 2011, and we regularly have funds. And today we have, at the moment, we definitely tapping the market for that.
Thank you so much. Loïc Ferry there with a great conversation from Chanavari Investment Managers, where he's Chief Executive Officer and Chief Executive Officer and Co-Chief Investment Officer. Now, Beeple nets nearly $70 million by selling his art as NFTs. Now, up next, we discuss the latest tech craze to hit the art world. I'm still trying to get my head around it. This is Bloomberg.
90% of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse. Many of those containers pass through here. Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP. But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Well, Christie's just sold the most expensive NFT or non-fungible token to date in the first ever crypto art sale by the historical auction house. Now, the piece by digital artist Beeple went last night for $69 million at auction. That places Beeple's among the top 3 most valuable living artists, along with Jeff Koons and David Hockney. Well, let's get the latest now with our Danny Berger. So first of all, Danny, I mean, I read a lot on NFTs, right? So what exactly is the appeal of spending $69 million for this?
Yeah, it's a lot. And look, art is always subjective. So, you know, who am I to say whether, you know, this is attractive as a piece of art or not? You know, I think we do have a picture of this. It doesn't really strike you as something, you know, you'd want to hang on your wall. It is a digital piece of art anyway, so you wouldn't really want to. But part of the appeal here really, I think, is kind of what every art collector looks for. One, do you get any sort of social cachet from owning this? And you certainly could in this case. 2, do you think you could resell it for higher? If there's enough hype around here, perhaps you can. And also, does it make you feel good by owning this thing? So I think, you know, if you use those 3 criteria that people tend to do in the art world, perhaps $69 million isn't that crazy. Perhaps it actually makes perfect sense in that sort of context.
So it's not just art. I mean, there's hype, I guess, about NFTs in general. Is this linked to crypto and even Bitcoin? And Danny, first of all, do you actually place it on the wall? Or what do you do with it? That's that's why I'm still trying to get my head around it.
I mean, you could, but like, this is part of the thing. You and I could post it on the wall. We could print it out of a printer. We can have an online image of it. We could save the JPEG of it. So really what you're buying here is the token that is assigned to the piece of art itself, or really to anything. We've seen NFTs be popular. Tweets are being sold via NFT. We've had the NBA Top Shot. It's you basically buy a highlight reel and you have the token that says, yes, you own this specific thing. But part of this, as you say, does have to do with the cryptocurrency boom. And it has to do with other tendencies of things like GameStop. You know, post-financial crisis, the idea of slowly accumulating wealth, I don't really think it's as there anymore. Yeah. It's this getting quick richer and this very online way of doing it. So Francine, now I'm just waiting for our meme to take off.
Yes, it will take off. I love actually the tweet that people sent when this happened. We're a family program, so I can't say it, but it's worth watching. We'll have plenty more on AstraZeneca and vaccines.
will start soon delivering also COVID-19 vaccines once all permissions have been granted. We are in discussion with Ministry of Health, with current logistic partners in different countries. So we're looking at Southeast Asia right now on delivering COVID-19 vaccines. We are also setting up already on the African continent in already one country and looking at the second country to expand.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Well, good morning, everyone, from London, Berlin, and New York on this Friday, March the 12th. Our top stories today. The checks are on their way. Joe Biden signs his $1.9 trillion stimulus into law. And in his first primetime address as president, he says all American adults should be offered a vaccine by May. Upping the pace, the ECB says it will speed up its bond buying program in the next 3 months, but yields rise as a central bank says that won't increase the total stimulus planned. And Thailand becomes just the latest country to suspend AstraZeneca's COVID vaccine after Denmark and Italy, even as Europe's regulator says there was no indication that the shot was unsafe. There's so much going on the markets, Kaylee. If you look at the stabilization after the records that we had in the U.S., we focus on cross-asset. We also need to talk about the number of pets bought in the U.K., completely unmarket-related story, although it's a supply-demand story. And then we look at NFTs. But on to the markets first.
Yeah, let's do the markets, Francine. As you mentioned, record highs here in the U.S. on stimulus optimism, but we aren't seeing that risk appetite following through on this Friday. We did see the CSI 300 in the Asian session close fractionally higher, even as U.S.-China relations come back to the forefront with the Biden administration announcing 5G export license limits for Huawei suppliers. Really where you want to focus, though, is in Hong Kong. The Hang Seng Index fell 2.2%. The second biggest drag within that was Tencent, down more than 4%. In the session on news, the Chinese antitrust watchdog censured the company. That big tech, fintech crackdown in China is expanding. Tencent, the latest target. That's in the equity market. In the FX market, it is a stronger dollar story this morning, including against the yen, which is sitting above 109. In the European session, stocks are lower. The stock 600 by about 0.5%, about 0.25% for the FTSE 100 in the UK. And the bond market is still trying to digest the news out of the ECB yesterday, ramping up its purchase program in order to keep a cap on yields. Nonetheless, we are seeing boon yields climb higher by about 2 basis points. The 10-year yield sitting right now at negative 31 basis points. 2 basis points, Matt. I know, not a major move, but we still always have to keep a check. Keep a check on the German bond market. And in the FX market, again, a weaker euro against the dollar, sitting just above 119 at this point. In the U.S., we are looking at futures in the red, led lower by big tech. It is partially due to those big tech concerns in China, but also the higher yield story. That's dragging down NASDAQ 100 futures by 1.8% at this point, as Treasury yields climb higher by nearly 7 basis points on the 10-year. Another spike we are seeing in the Treasury market, that yield now back above 1.6%. And of course, a stronger dollar is weighing broadly on the commodity complex, though crude only lower by about 0.1%, right now sitting just below $66 a barrel, Francine.
Yeah, so interesting, Kate. I mean, there's these bitty stories. Of course, it's all about the stimulus in the U.S., so that definitely put the market awash with cash. And then here in Europe, we're kind of, taking a little bit of a pause for breath and seeing what else comes next. So this is what they'll be watching at 8:30 a.m. Eastern time. We get U.S. February PPI numbers, 10 a.m. Eastern, University of Michigan consumer sentiment data, and then at 1 p.m. Eastern, that's at 6 p.m. in London, the Baker Hughes issues its U.S. rig count. I mean, it should give us a little bit of an indication, actually, about, for example, the shale oil, that story, whether they've really been priced out of the market, and then the consumer sentiment in the U.S. would give us a good indication, actually, of whether people are ready to spend or not. It was interesting, Matt, when you look at consumer spending, and I think if you look at some of the luxury sector, including Burberry, it's encouraging because as soon as you get out of lockdown, the people that have the money can spend the money. And again, it's just a good way of looking at how, when people are vaccinated, how quickly the economy could bounce back.
Is it acceptable to wear anything from Burberry, really, except for the trench coat? Would you,
I'm Italian, Matt,
otherwise?
So you can't ask that to an Italian.
I would say probably not anymore. I remember, you know, in the early 2000s in London, it was all the rage, especially in Essex. You know, that plaid
they've turned that round.
From Burberry. Soccer players' wives.
Matt, they have the former Givenchy creative director now. So I think it's a little bit cooler, actually. It's certainly, if you look at the numbers, that's what they're suggesting.
All right. Well, yeah, I know that they had a good outlook, and we'll watch the stock for sure today. I want to point out something that reminded me, Fran, of music that we can all agree on. Take a look at this terminal. Here you see room to rise in Europe and China stock markets. It's pretty basic. It's just on top here you see the NASDAQ 100. In yellow you see the S&P 500. In white, China. Big drop there at the end. And then in purple, you see the stock 600, all normalized from the beginning of the pandemic, really the bottom for stocks. And you can see that Europe and China really have a lot of catching up to do with the NASDAQ and the S&P. The reason this reminds me of music, you know, every morning before the show, we disagree on what to listen to. I'm more into punk rock and metal, and you ladies want to dance. And I'm thinking,
give you some
for some reason, it reminds me of Bob Marley.
Yeah,
what is it?
It's a bit like the deflation debate.
But do you think Bob Marley would be an acceptable compromise? You could dance to Bob Marley,
dance
right?
to?
You can. You can dance slowly to Bob Marley.
Yeah. I would love to see Matt dance to anything that he, you know, makes us listen to right before we go on air. Kaylee, what are we looking at in terms of market movers? A lot of focus, of course, on Chinese tech.
Yeah, a lot of focus on Chinese tech, Francine. Of course, that big tech crackdown is weighing on some Chinese companies listed here in the U.S. The ADRs of JD.com being one example. They're lower by nearly 4% in pre-market trading, and sentiment is negative for big tech more broadly, and the momentum trade continuing to be put under pressure by higher yields. Tesla is lower by more than 4% before the bell at this point. But your biggest outperformer in the pre-market, the biggest mover to the upside, is Novavax, surging more than 20% after results for its COVID-19 vaccine candidate trial in the UK showed the vaccine is 96.4% effective. So a lot of optimism there. And then Coupang, I have to point out as well, of course, it debuted yesterday, a great debut session. The stock rose 41%. It's the biggest IPO since Uber, and we are seeing some follow-through buying off the back of that. That stock higher by about 5.5% in pre-market trading at this point, Francine.
Yeah, thank you so much. I know we're spending a bit of time, of course, Matt, looking at, you know, what the China crackdown on technology means, and there was a little bit of a spat between the U.S. also with China on 5G. Now, a couple of other things we're watching, and I know, Matt, you're all over the vaccine story in Germany, especially with this AstraZeneca story. It just seems they can't get it right. They're just not delivering enough supplies, and that will probably enrage the commission even more.
Not delivering supplies, and they keep getting, now granted they're smaller countries, but they keep having problems with national governments. Denmark was the first to say they were halting AstraZeneca vaccines. Now Bulgaria is saying they're going to halt AstraZeneca vaccines. And even if, you know, Sam Fazeli tells us the efficacy is there. This is a vaccine that works, and if you're offered it, you should take it. This is still a hit to perception and a hit to the stock price.
And I think they're the only vaccine that are actually doing it for free. They're not making money out of it. This was one of the conditions that Oxford set out when they developed the vaccine. Now, coming up next, we look at markets, we look at treasuries. We, of course, look at that ECB press conference from yesterday with Peter Garnery. He's Saxo Bank head of equities. After that, also later on the latest trust barometer on whether we trust vaccines, the media, politicians, Richard Edelman, the Edelman chief executive officer. This is Bloomberg.
women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
I don't believe we've overshot the mark. I think that this package is the right size. We put it together by asking, what are the needs of Americans? Where do we need to get money and how much to relieve all the suffering that's occurring in the economy?
Well, that was Treasury Secretary Janet Yellen after the passing of the bill. Joining us now is Peter Gonry. He's Saxo Bank Head of Equity Strategy. Peter, the only thing dominating markets is the question if this relief bill actually brings inflation in a couple of weeks. What does it mean, or months once they're dished out? What does it mean for your equity strategy forecast?
Well, we are overall still positive on equity, so we think the free cash flow yield forward is still around 5.5%, so that's pretty attractive given what you're offered elsewhere. So we are very constructive on equities, and we think the next 18 months will provide solid growth. We now have the new stimulus bill from the US. We'll have China, and we think also doing more fiscal stimulus later into the year when their base effects kick in and their economic growth numbers year on year look a little bit less rosy, and then they will do something. So you think we should still be overweight equities, but within that framework, with the rising inflationary pressures, rising prices, higher interest rates, we think we could go to 2.5% when the output gap is closed in the US by the end of the year. When we get through on that journey to 2.5%, the rich pockets of technology stocks, which are richly valued, will be very sensitive to these rising interest rates because it lifts the discount rate of their future cash flows, which are fine to the future. And that's a result. We think this divergence right now that we're seeing between S&P 500 and NASDAQ 100 will continue.
Peter, where's the biggest bubble, and when will it burst?
Well, the biggest bubbles we currently are looking at, I think, is within green technology. It's also within what we define as bubble stocks, so companies with an enterprise value to sales above 10 and negative earnings forecast. You could argue some areas within the U.S. biotechnology sector or industry, if you will, is also look quite bubbly. That's part of the whole ARK Invest and ARK Innovation ETF complex. Those sorts of places are very interest rate sensitive here in the short term, but long term, a lot of these technology stocks will continue to do quite well, we think, because the long-term driver of any company and any stock price is, earnings growth and revenue growth, and that is still in the technology space. But short term here, we have a lot of trouble, I think, with these rising interest rates.
Peter, you just said you think that the divergence between the NASDAQ 100 and the S&P is going to continue. I was showing a chart just a little bit ago with the NASDAQ kind of pulling away from the S&P. Obviously, it's had its issues with rates rising and that scare. But here you see it again, the NASDAQ 100 in blue, the S&P in yellow. You expect the NASDAQ to continue outperforming?
Now, what I mean is that when we crossed the 1.2% in the US 10-year, it was very clear that the interest rate sensitivity was kicking in among bubble stocks and NASDAQ 100, whereas the S&P 500 was holding up pretty well. Now we had an all-time high in the close yesterday in the S&P 500. We're still down on the close around 5.5% of the NASDAQ 100. And today, you're seeing the US 10-year yield creeping back to 1.6%, and the interest rate sensitivity is kicking in again. And now you're seeing that divergence, so NASDAQ is underperforming the S&P 500 and Europe and the likes. We think that divergence, that will continue as we move towards those 2.5%, because a lot of the internals of equity valuation will have to adjust to these higher discount rates. And when we have closed the output gap and we go to that 2.5%, then we can talk really long term again. And then I think the technology sector is still a place where you want to be overweight. But on this journey to 2.5%, it will be a bumpy ride for some pockets of the technology space.
I've got a forecast here. The median forecast for the 10-year yield at year-end, Peter, is 1.7% right now. You can see the 10-year here at just about 1.6 in blue. What's your forecast for the 10-year year-end?
We think we can go to 2.5%, and the reason for that is that right now the U.S. economy is running at a minus 3% output gap, and we have almost 17% fiscal deficit, 16.5, I think, and that's before the 1.9 trillion will reach the economy. So what will happen is that as we reach fully vaccination in the U.S. by mid-year, then when we move into the second half, maybe already by Q3 and maybe early Q4, the output gap will have been narrowed quite dramatically, and you'll still have a large fiscal impulse into the economy. And that's an outlier if you look at data going back 50 years. And we think that will drive economic activity and growth and still continue to push inflation expectations higher. Right now, we're seeing global supply chain disruptions, and that's from the supply side. That is pushing prices higher, commodities up more than 60% in, 8 months or so. Right. And we're seeing all these disruptions, semiconductors, etc. And then when we move into the second phase, or the next year, 18 months, it will gradually be more and more demand-driven, and that's a completely different inflation picture we'll see. And we can see inflation at 3.5%.
Well, we know, Peter, that the Fed isn't all too worried about inflation or about the level of bond yields at this point. The ECB more so, and is taking action on that. Does what you heard from the ECB yesterday change your calculus for European equities at all?
No, I don't think so. I mean, European equities right now is just riding, you can say, the narrative, the tailwind of rising commodity prices and steepening yield curve and rising rates because of the index composition in Europe. Europe is doing much better than the US because of our higher shares in mining companies, energy companies, and financials. So not really. And I think the Fed will allow inflation to shoot significantly higher than what most people think. And I think there's a perception inside the U.S. government. We have historically high wealth inequality, and it's very difficult to raise taxes in the U.S. So if you want to do a wealth transferring, the way you do it is that you do more of these stimulus towards the 50% lower part of the income distribution, and you let inflation eat into wealth. It's basically a stealth wealth tax, you can say.
I want to shift the focus to China as well. How are you approaching the Chinese equity market right now, especially with the crackdown that we are seeing in a lot of those major Chinese tech companies? Does that concern you?
It is a concern, but on the other hand, I don't think the Chinese government has any choice. I mean, these technology giants are here. They are the basic infrastructure of the digital China. I just think that the Chinese government wants them to play by a little bit different rule book. I think profitability long-term will continue to go up. I think there is a tremendous change going on in China in their consumer markets. I think consumer stocks in China and technology stocks will continue to do quite well. It's where you want to be positioned. But it's not all rosy for China, as you probably well know. There's a tension with the US. There are manufacturing being offshored out of China. There will be tremendous, I think, headwind over the next 10, 20 years from demographics. Their labor force will soon peak out and then begin to gradually decline. That will obviously, create some headwinds for China. But it's still, we're still at a very low point in terms of wealth per capita, and that will continue to grow. So you cannot ignore China. Peter, it's more than 50% of emerging markets.
Peter, does Burberry just show us how consumer demand can shift quickly once an economy reopens? And if yes, what does it mean for the consumer sector?
This is a very good question. So the big winner in the past year has obviously been the e-commerce stocks. I mean, they have up 3 or 4 times for the entire industry. We think that some consumer behavior obviously has changed permanently towards more online. We made a huge leap, but there will be some gradual changes in behavior when we open up society. I think people want to go out. We want to actually support also the physical world, physical stores. We're going to go to restaurants, etc. So I think that actually e-commerce stocks will face 2 headwinds. So consumer spending will have changing behavior over the next 12 months as people get back into the streets, the high streets, but then also logistics cost and last mile delivery costs are accelerating. And we can already see yesterday in JD.com that the operating margins are actually getting squeezed a little bit here.
Right. Peter,
so what about
Peter
NFTs, Peter? If e-commerce, can I just squeeze this in? If e-commerce faces problems, what about Justin Sun's $69 million NFT, non-fungible tokens?
Don't even go there. I know it's Friday. I don't even have a comment for NFTs. So.
All right, not awkward. Peter, thank you. Peter Gunry, Saxo Bank Head of Equity Strategy.
So
now, coming up next, 1 year since COVID-19 was declared a pandemic by the WHO, we'll speak with a lineup of guests, including Bank of America Chief Executive Brian Moynihan, Melinda Gates, the Uber Chief Executive, and the Peloton Chief Executive as well. This is Bloomberg.
Valuations, particularly sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Francine Lackman, London, Matt Miller in Berlin, Kaylee Lyons in New York. Now let's get straight to the Bloomberg First Word News. And Russia hopes to vaccinate almost 1 in 10 people on the planet this year. Now it is ramping up overseas output of its Sputnik vaccine. The state-run Russian Direct Investment Fund says the biggest producers of the shot will be India, China, and South Korea. Now, it was also a record price for the NFT market at Christie's in New York. Digital artwork, less than a month old, sold for $69 million. Now, the sale of Everydays, the first 5,000 days, by the artist who calls himself Beeple, shattered every previous record for the medium. The artwork is attached to a non-fungible token, an NFT. Now, that's a digital certificate of authenticity that runs on blockchain technology.
I think really what it represents is sort of just, a wake-up call or, sort of an announcement to the rest of the world that, this is, it's here to stay. It's real. And I think it's great for everybody involved. It's great for artists. It's great for, galleries, museums, kind of anybody working in the digital art space.
Gabriella from Liguria just emailed saying, that is ridiculous. What do you even do with it? 69 million, you can't even put it on a wall.
Yeah, no, I mean, it is the most ridiculous thing I've ever heard. But Justin Sun isn't known for his investing acumen, right? I mean, he bought GameStop for $10 million at the very top of the trade. He paid more than $4 million to have lunch with Warren Buffett and doesn't seem to have taken very much from that meeting. So it doesn't surprise me that he's the one behind this $69 million purchase.
Unless he's a genius, Kaylee, and then can sell it off for more in 1 or 2 years.
Well, that's the question. I mean, this auction started at, what, $100, and it got up to $69 million. So clearly people think this thing is valuable. My other takeaway from this is that Christie's is letting them buy it in Ethereum. So digital coins now coming to the art world. You can actually use them as a currency.
Yeah, I mean, I've seen tweets also go up for NFTs. I just find it fascinating. I usually feel very young. I feel like I need to become younger in my head to, get to grips with this. Now, coming up, we'll maybe talk about NFTs, but we'll certainly talk about the Trust Barometer with Richard Edelman, the Edelman Chief Executive Officer. This is Bloomberg.
Not only just COVID, but it's COVID related, but it's also stress related to job. I think COVID probably just sort of was the nail in the coffin for a lot of us. Having the destruction room here is also a very healthy outlet. I do not encourage it as something that we do on a regular basis, but I do find that when people come in, being able to break plates, being able to write out whatever's on their mind and letting it go, being able to just take out their frustration and their anger.
come to a place like this and be able to break some stuff and release some tension without going to jail.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance, the early edition. I'm Francine Lack in London, Matt Miller in Berlin, Katie Lyons in New York. Matt, I'm all fired up about some of the things we're seeing on the markets. I know we're looking at bonds after we had a story saying, look, the ECB yesterday was saying that they can do more in terms of length, but it doesn't mean that they'll actually buy more in terms of amount. So we're not necessarily expecting more stimulus.
Yeah, absolutely. Bund yields soared 2 whole basis points. It was an amazing ECB meeting. I took a lot out of it. The spread between bunds and treasuries is also interesting to watch. Maybe the Fed is going to have to use stronger language next time they go public as well. So I think that's the interesting thing to watch.
Yeah, I mean, communication for these central banks is key. And Kaylee, they're obviously watching what's happening with treasuries. What else are you watching on the markets?
Well, in treasuries, we are getting a bigger move than we are seeing in bond yields, Matt. Yes, 2 basis point move on bond yields, but in treasuries, it's more like 7 basis points, 6 or 7 basis points today. If we can pull up the markets, we could see that futures are actually lower really across the board. But the biggest underperformer today looks like it is going to be big tech. NASDAQ 100 futures down about 1.9% at this point. A lot of that has to do with the higher yield story. U.S. 10-year Treasury yield sitting right now just below 1.6%. But part of that also is the big tech crackdown escalating in China. That is weighing on tech shares really across the world. The other thing is with yields moving higher, we are seeing a stronger dollar today. The dollar spot index up about 0.5% to 91.91. That is weighing on some of the commodity complex. As for what is moving in pre-market, what you should watch come the opening bell in about 4 hours time here in the U.S. Chinese companies listed in the U.S. are under pressure with that crackdown, including Alibaba, which is down about 2.6% in the pre-market at this point, but tech broadly and momentum broadly, as we know, is under pressure. The ARK Innovation ETF down by 4% before the bell. Apple down by nearly 2%. And when we were talking earlier to the chief equity strategist over at Saxo Bank, and Francine, you asked him where you saw bubbles. He said green energy plays were one area in which things were looking a little bubbly. That applies to fuel cell energy, which is lower by nearly 5% in pre-market trading today, Matt.
One of the things I'm focused on is initial jobless claims. Mike McKee put this chart together, and I think it's really striking. Initial jobless claims weekly coming out. This chart goes back to the beginning of August last year, and you can see that the claims have not fallen substantially. And in fact, the red dotted line here and the red solid line are the previous record highs from 1982 and from the great financial crisis. So we have initial jobless claims in the U.S. that week after week after week are worse than they were during the great financial crisis. I think it's pretty striking. And it's going to play into, obviously, savings rates, spending, and the need for stimulus.
Yeah, and of course, that's what we're trying to figure out, is the trajectory of the recovery. Now, Thursday, Matt, also marked the 1-year anniversary of the day the coronavirus was declared a pandemic and U.S. states began entering shutdowns. Today, we take the pulse of public opinion in America. Now, the latest Edelman Trust Barometer finds that 72% of the respondents remain concerned about the virus. 52% have experienced a health impact due to the pandemic. 67% are still living in pandemic survival mode. Well, to discuss the latest report, we're joined by Richard Edelman. He's the Edelman Chief Executive Officer. Richard, we love your trust report because it really captures some of the uncertainties out there. Do you actually see the uptake in vaccine as the ultimate trust barometer, and how is that doing?
Well, Francine, thank you for having me. The reality is that Americans are still in trauma. And you see that in the unwillingness, for example, to go on an airplane, 20%, take a subway, 15%, visit grandma, 25%. So we're still kind of in a fetal position. And you also see this in the sort of lack of willingness to send your kids to school. And part of this is half of Americans in our trust barometer over last weekend said, I know someone who's been hospitalized or who's died. And on top of that, 1/3 of the respondents said, I've lost my job or I've had significant decrease in income and I'm struggling to pay my bills. So we're still sort of like in the crouch.
Yeah, and Richard, and we always, of course, think of the families that lost their loved ones. Once people have a vaccine, once that is, when you get the first inoculation, if you need to, are people willing to go back to, what our lives were in 2019?
Well, I think that's the big question. And I think my employer plays such a big role in this, Francine. The trust levels for the person who you work for is so much higher than for business or for government. And that's why this privileged position is, give me quality information about getting vaccinated, but don't hammer me and say, if you don't get a vaccine, you don't come back to work. And also don't hammer me about insisting that I come back to my workplace. Only 70% of our respondents said, don't insist that I get a vaccine. Let me make that decision.
Richard, who's the right person? Sorry, go ahead, Matt.
Sorry. Well, what if businesses do that, Richard? What if you start seeing airlines, restaurants, hotels ask for vaccine passports?
You're going to have a very disgruntled employee force. Now, you could argue, well, what choice do the people have? I argue that the best and brightest want to work for companies that are enlightened enough to try and persuade them and give them good education. And what we found again in the data is there's a big education gap still about vaccine willingness. That, for example, there's this legend that African Americans and Hispanics are intentionally avoiding the vaccine because of Tuskegee or whatever. Not so. They actually don't believe that they have access, A, to quality information, and B, to get the vaccine, that they can't get through on the website or whatever. And so
Richard,
that's a missing link.
Right, who's the best person, who's the best organization to have that vaccine information? So who do people trust enough to trust the information that they put out? Is it agencies? Is it companies? Is it local media?
Well, the trust in media has collapsed in the U.S. In the last year, a drop of 20 points to 40% for mainstream media. It's increasingly my doctor, or I like to watch Dr. Fauci, a chief scientist. And beyond that, it's my employer CEO. So again, the company has a big responsibility to educate and advocate, but not to insist.
Do you see big companies do that? I mean, I think you make a really good point. Your own boss, when your own boss tells you something, especially if he's kind of a benevolent billionaire, then you listen. Do you have that actually going on?
I think that companies have gotten the idea. In fact, the most credible source of information now, Matt, is my company's newsletter, above mainstream media, above government, et cetera. So if trust is local, trust in my doctor, trust in my company, it's all quite consistent. But it has to be frequent. The barometer also said employees are asking for information weekly about the status of the pandemic, where I can get the vaccine, et cetera. And even Columbia University, for example, for its employees is doing this every week.
Do you think this problem is worse in the U.S. than it is in other countries? I mean, it strikes me that the U.S. is a much more partisan country than at least the Western European cultures that I know firsthand now because I live here. Is it worse in terms of trust as well?
It's a deeply divided country. I mean, for example, 80% of Biden voters say that they're still in pandemic survival mode, 50% of Trump voters. And, as for trust in government, high 50s for the Biden people, low 30s for the Trump people. So it has to be my employer and business that's going to have to be the institution that's the fabric that knits us back together. And that's why the role of my CEO is so important right now to stand up and speak up. And I also hope that business takes this opportunity on the first anniversary to look at itself and say, we shouldn't just go back to normal. We should create a new normal. where business cares about wage levels, cares about systemic racism, makes sustainability part of the business process, that it's a reset.
Richard, who's building back better? I know that this is like the buzzword of 2020. Are people and chief executives actually doing it, or are they just talking about it?
No, I see an incredible reaction by CEOs. Dan Schulman of PayPal has declared that he's raising wages for his staff because half of them literally were in a certain way below the living standard of the community. And Alan Jope of Unilever has also insisted that his entire supply chain raise their wages within the next 2 years or lose the contracts with the company. So again, it's wages and also on systemic racism. I mean, I see a deep effort by companies that are improving their boards, making their managements more diverse, and also doing a lot to mentor the African-American, Hispanic young people in the companies.
Yeah, so many people say it's about time. Richard, thank you so much. Richard Edelman there, the Chief Executive Officer at Edelman. Now, coming up, we have a COVID-19, of course, update with Andrew Pekosh, Johns Hopkins Bloomberg School of Public Health professor and virologist. That's coming up shortly, and this is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
A simple view would be that I think there's a 1/3 chance that the Fed will stay behind the curve, inflation expectations will ratchet upwards, and will become an inflationary country for at least a time above the 2% target. A second risk is that the Fed will respond, that given all the things they've been saying, their sharp response will be unexpected by markets. And as has been the case in the past, when the Fed has had to step in to stop an incipient inflation or incipient bubble, it will be a chaotic process with very substantial instability and possible recession.
Bloomberg contributor Larry Summers there speaking around the one-year anniversary of the pandemic. He says stimulus could cause overheating. We'll tune into Wall Street Week tonight for its stimulus special. Now, joining us now to talk about COVID-19 is Andrew Pekosh at Johns Hopkins Bloomberg School of Public Health professor and virologist. Andy, I've missed our weekly update, so I'm so glad you could join today. When you look at AstraZeneca and all of the media out there, a lot of also countries saying that actually for the moment they've suspended using the vaccine. Why are they getting such a bad reputation?
Yeah, some of the data coming from the AstraZeneca it's a little head scratching. Certainly, I think from a positive standpoint, it shows that vaccine safety is still a high priority across many countries, and monitoring for these kind of adverse effects is still very much on people's minds and governments' minds. So a pause to make sure that some of these adverse events are not associated with the vaccine or are associated with vaccine is good, especially in a time when we know vaccine supply is the problem and countries are really working towards getting more vaccines. So I think this is a pause. I think we'll probably see in a week or two the vaccination campaign come back into place. But again, I would view this as a good thing. We're monitoring vaccine safety. We're not just rolling out the vaccine haphazardly. We're really paying attention to what's going on in the population and looking for these adverse effects that may only come out when we're vaccinating millions of people.
Is it too soon to tell the people that have been inoculated what they can do? What does the CDC guidelines actually tell us? Can people, go back to work easier? Can they travel? Like, what's your take overall on this?
Yeah, I think we'll see over the next few weeks a gradual rolling out of additional guidelines for people who are vaccinated. At least here in the U.S. and in many countries, the vaccination campaign has really been limited to people who are in high-risk groups, healthcare workers, the elderly, people with pre-existing medical conditions. So the guidance from the CDC is really focused on some of those populations and what they can do. As we roll into the mass vaccination campaign, we're going to start to see more and more information on what regular people can do, going back to work, being able to congregate. I think President Biden mentioned a few things that are very important in terms of, goals for sort of early summer, midsummer, as a time when we really are going to start to see changes in how we act on a population-wide basis.
How can we get the vaccine out to more people faster? I mean, we were just talking with Richard Edelman about the trust that people put in their employers. Why not, for example, give big companies large crates of shots and have them divvy them out? A lot of them have nurses. Could you see more shots going to community centers, to schools, to libraries? Do they still have libraries? In any case, places where people can go in their local communities to get these.
Absolutely. I think we're seeing that supply was a limiting factor for a long period of time. Now we're starting to see that supply is not going to be limiting in a few weeks. And so there really has to be sort of a fulcrum here where we turn to start thinking about how best to immunize as many people as possible. And one of the things that starts with is making sure that there's a trust between the community and the government and the healthcare agencies that are going to be administering the vaccines, to make sure people understand that this vaccine is safe. There are going to be tremendous benefits in getting as many people vaccinated as fast as possible. And per the point we just talked about, that vaccine safety is still a high priority. Equity is an important thing here. We're going to have to find ways to get into the communities that have suffered so much from the adverse effects of this pandemic that now appear to be lagging in terms of getting vaccine into those communities. Lots of places are coming up with unique strategies. We're going to see much more of that over the next few weeks as we switch from the targeted vaccine campaigns to these mass vaccination campaigns. But public trust is going to be an important thing to get that enthusiasm for people to go out there and line up for their vaccines.
Well, Andrew, with the vaccination campaign underway and with case numbers going down, it's giving a lot of states confidence to lift restrictions to reopen their economies more, including Texas, where there's no capacity limits and you don't have to wear masks. Others are rolling back their mask mandates in the coming weeks. Many say it's too early to be making those moves, that it could cause another wave, but what would another wave actually look like given so many Americans have either already had COVID-19 or been vaccinated? Would it be as bad as we have seen in the past?
Well, one of the advantages of the vaccination campaign targeting the vulnerable is that we should see, and we are seeing actually, a faster drop in hospitalizations and in deaths due to COVID-19, faster than we're seeing in terms of total case numbers. Now, the issue that we worry about, particularly as a virologist who's been studying viruses for over 20 years, is unless we get case numbers down, we're giving the virus opportunities to sort of adapt, to try to find ways to avoid the immune response that the vaccine is getting, to become more efficient and transmitting. And so we need to get the case numbers down, even if hospitalizations and deaths are going down faster, because we don't want this virus to sort of find a way to get around some of our existing public health interventions. And the more cases we have, the more opportunities this virus has to evolve into something that's maybe easier to transmit, as we're seeing now with some of the variants, but also that may be able to get around some of the immune responses that the vaccine is giving. So we want to get ahead of the virus. For so many months, we've been behind the virus, particularly here in the U.S. We need to get ahead, and that's going to require us for the next month or so to really be strict and try to get these case numbers down to a level where we can start really thinking about relaxing some of the interventions.
Andy, thank you so much. Terrific briefing as always. Andrew Pekosh there of Johns Hopkins. Now, coming up next week, well, 1 year since COVID-19 was declared a pandemic by the World Health Organization. We'll be speaking with a lineup of guests, including the IMAX Chief Executive, former Education Secretary Margaret Spellings, Sal Khan of Khan Academy, and the Chief Executive of Expedia. It'll be a 1 year on from the pandemic, what we've learned and how it will change our economies forever. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is a market that
over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kelly Lyons in New York. Shares of e-commerce giant Coupang continued to surge in the pre-market following the company's IPO yesterday. Coupang has been dubbed Korea's Amazon and is also facing some criticism. It's not just the hoopla around the IPO over the treatment of its workers. The CEO, Bom Kim, spoke with Bloomberg's Emily Chang and me.
We have to continue to change and make the standards better. We are raising the bar and we'll continue to invest. We've invested hundreds of millions of dollars in automation that makes not only the deliveries better experience for our customers, but makes the work easier for our employees. And we'll continue to create good jobs, the best working condition jobs in the country, as well as invest billions of dollars in infrastructure that extends our network deeper and deeper and closer to the customers. 70% of the population lives within 7 miles of one of our centers. So you can see that we're continuing to innovate on this front.
Bom, you also invested heavily to keep warehouses safe through the pandemic, disinfectant. For example, the pandemic boosted growth. How has the company changed through the pandemic, and what are your expectations for growth post-pandemic?
COVID was challenging for us, and I think our teams, because of, again, of our integration, our technology, and the hard work of so many teams, we were able to maintain our delivery promise to nationwide 365 days a year.
And that was the CEO of Coupang, Bom Kim, talking to us about the IPO. I think the shares sold at $35 and opened at $63.50. I want to show you something else that I'm watching. We've been talking about this a little bit, the divergence in yields between U.S. Treasuries, the 10-year and the 10-year Bund. You can see this goes back to March of last year. The climb that we're seeing, or March of 2019, the climb that we've seen since the bottom has been impressive, up to almost 200 basis points now. The interesting thing is this is all Treasury, Kaylee. The Bunds went from negative 35 basis points to negative 31 basis points, so a 4 basis point move. Treasuries went from 50 to 160, so more than tripled.
Well, and you can bet the Treasury market is going to be watching PPI data out at 8:30 a.m. Eastern time. You, me, and everybody else, Francine, all obsessed with inflation.
Yeah, inflation and NFTs. We'll have plenty more on Bloomberg, including the Wall Street Week special. This is Bloomberg.
Of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I have asked the Securities and Futures Commission and the Hong Kong EX to work together to explore the viability of our own Hong Kong version of specs. We remain very confident on the competitiveness of the Hong Kong stock market.
Biggest stimulus for all of us is if we can get out of COVID.
I'm pretty convinced that the US is going to see a gigantic rebound, especially in consumption.
It seems like the market is now finding its footing. So if things don't get worse, there's no reason for the Fed to do anything.
It's not clear whether rising rates are good or bad for the market. It is the #1 question for investors.
The market knows that if financial conditions really start to tighten in the U.S., the Fed can do more, a lot more.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
You've seen this movie before from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance alongside Lisa Abramowitz. I'm Jonathan Ferro. Tom Keene is away today. He'll be back with us on Monday. In your equity market, S&P 500 futures down 0.6%. Lisa, the Nasdaq off by 1.7. The Y is in the bond market.
It's almost like a Pavlovian response. If the bonds sell off, so does the Nasdaq. The Nasdaq disproportionately underperforming other equities. And it raises a real key question, John, and I'd like to explore it over the next few weeks, which is, does this correlation between bonds and tech stocks really make sense?
I think that's a conversation we've got to have a little bit later today through the morning. Lisa, the other conversation we've got to have is the President of the United States pushing forward with reopening plans, aiming for something close to normal on July 4th and pushing states to allow everybody who wants a vaccine to get a vaccine by May 1st, Lisa. There are certain things he can do, there are certain things he can ask for, and there are certain things that states will say yes, and there are certain things that states will say no to.
Right, it's a wartime effort, that's what he was saying, and it really reminded me of Oprah, sort of, you get a shot, you get a shot, you get a shot, everybody gets a shot on May 1st. There's a question, though, here about how much optimism people have and how you temper that by saying, stay home, wear your masks, be responsible for a couple more weeks. People are done, and if you go outside, it feels like people get the sense that the pandemic is over, even though it's not quite yet.
Certain state governors are done too. The outlook gets brighter. Look at the price action this morning, 160 on a 10-year. That's the number you need to be looking at in the U.S. Treasury market. Yields are higher by 6 basis points. 1.6% is your yield on a 10-year maturity. In the FX market, dollar strength is back. Kit Jukes is SocGen out with a note this morning. He does not want to fight this. Euro dollar 119.17. We come in 0.6%, Lisa. And there's the move in the equity market, down 23 on the S&P. We're off by 0.6%.
Yeah, that Kit Jukes note I thought was really interesting, talking about how this divergence between bonds in the U.S. and Europe will continue to fuel dollar strength. Hopefully we can get more on that later today. Another aspect in this divergence is inflation. We're going to be getting at 8:30 a.m. the U.S. Producer Price Index data. And what it's expected to show is, yes, we're going to see prices climbing, inflationary pressures, but not necessarily getting too extreme yet. That is the expectation. This is the type of metric people are watching perhaps even more closely right now than jobs, because inflation is going to guide so much of the conversation over the next 6 months. 10 a.m., I'm interested in this because I've been following the antitrust sentiment in this current Congress. How much are they going to push back against big tech? The House Judiciary Committee is holding a hearing with Brad Smith of Microsoft The tenor of it will be whether or not big media companies can negotiate directly with tech companies like Microsoft, like Facebook, like Google about how their work is distributed, a real focus on the power that big tech has over the information stream in this country. And then 1 p.m., very interesting to see whether the shale patch is over. How much can they ramp up production in the face of higher oil prices? We're going to be getting the Baker Hughes United States oil rig count data coming out. We've seen it absolutely fall off the cliff, then kind of tick up, but it's remained really subdued. Disciplined is the word. John, how quickly does that turn around, especially as OPEC Plus indicates an unwillingness to really ramp up production in the face of higher prices?
And breathe. Wasn't that nice? You got through the whole thing without...
Although I got to say, sometimes I kind of enjoy it.
Do you really? To be interrupted and stamped on? You can have that back on Monday. Tom Keene is off for a long weekend. Brent crude unchanged today, $69 and about 66 cents. WTI at about 66. Your daily average now for vaccinations in America over the last 7 days, 2.23 million doses per day administered. Lisa, it gets better and better, and it's set to get even better.
Yeah, but the question is, how long lasting will it be, right? And this is sort of the question baked into bond markets. Inflationary pressures now, long term, the same trend that we've experienced for a long time. Is this different, though? It's a political question. It's also a markets question.
1.6% is your yield in a 10-year Treasury right now. 225, the new year-end price target over at Deutsche Bank. Have we finally started to move the forecast? Have we capitulated yet? Let's bring in Jay Bryson, Wells Fargo chief economist. Jay, let's talk about that. Do you sense the capitulation? Are we done the last couple of weeks, the big upgrades, the big bond market move?
It seems that way. It seems like everyone has been falling over themselves to kind of upgrade their forecast over the last few weeks. And so, I mean, we've had a big sell-off in the bond market, had a huge rally here in equities. And so I would think things are going to kind of take a breather, and we're just going to have to really digest the incoming data to see if it's as good as what we think it's going to be.
What's your number, Jay? What do you think it's going to be?
In terms of GDP this year?
Yeah.
Yeah, so I mean, we're looking for over 6% this year, and for next year, we're looking for over 5%. And if that's right, just to put that into context, if those two numbers are reasonably close to being correct, I mean, that would be the strongest two-year period of growth that we've had since the early 1980s. So, I mean, that's very, very strong. Now, we're at the top, we're at near the top of the consensus, but, that consensus number has been drifting up over the last few weeks.
What about inflation? What's your forecast for that?
So remember, CPI inflation this year, it's a low bar to beat for last year. Last year we saw prices collapse in March and April. So this year we're looking for a CPI inflation rate of 2.7%. And that's kind of at the north end of where we've been. Now, keep in mind, a one-off price increase for a year is not necessarily inflation. It does not necessarily mean we're sitting at 1976. About to experience a number of years of very, very high inflation. Inflation's a process, and we still have a labor market that's relatively weak. We still have millions of people who are sitting out right now. We expect them to start coming back into the labor market as things reopen. We think that will kind of keep a lid on inflation. So 2.7% this year, but only 2.2% or so next year. So
Jay, let me jump in just quickly, because we're talking about numbers with a two handle, and the fear out there is unbelievable when we have conversations on programs like this. Do you think it's past experience that has just anchored this conversation around 2%, and anything north of it, close to 3%, is somehow bad? In the UK, in the last 10 years, we saw north of 3% with Governor Carney, look through it. We saw north of 5% with Governor King, looked through it. Why are we having this huge conversation about a potentially return to the 70s when you're talking about maybe a push to 3?
Yeah, and I mean, the thing you have to worry about is if you go to 3, 4, 5, whatever, right? The Fed then really has to get aggressive and really has to step on the brakes. If Jay Powell was in this conversation right now and we said to him, we're looking at a 3% inflation rate next year on CPI, I think he would say, so what? 3% is nothing, right? If they're going to make a mistake at this point, they're going to overstimulate the economy, and maybe that leads to higher inflation down the line. But they know how to take care of that.
Well, hold on a second.
Raise rates.
Jay, there's a question here about what's transitory and what's longer lasting, and how good we are at determining that, right? I mean, that's the underpinning of what you're saying. The Fed will say we can look through this because it's transitory. What are the signs that the inflationary push is not transitory?